Welcome to Trade Live with IG with Rich McDonald and Angeline Ong. Rich.
A very good morning to you, Ange. A very good morning to all of you. And we are diving in to earnings season today. The big heavyweights of the FTSE, the numbers coming up for you. What else have we got on the show today, Ange?
We've also got the one and only Elliot live from the trade floor.
Fantastic, our options guru.
Yeah, he's going to talk us through quite a few things, including getting across the flows as well in this monster week. He's going to tell us where they're happening, whether it's mostly stocks or whether it's fixed income or whether it's commodities, and also where the risk on is taking place and how to position for that.
Well, plenty to come up there. We've also got, look, it's 36 hours. There's only one thing people are going to be talking about for the next 36 hours. It's how much tax are you going to be paying and how much better is Britain going to become. And we've got plenty previews for you. We'll tell you where to get Axel's preview. We'll go over the preview in the Metro today, and also Tom Wilsonholm is coming in to talk about budget history.
Now, if you want to actually meet Rachel Reeves, she's sometimes seen Tom Roberts is like, she's not Robert's favorite person, how to say, but she is sometimes seen at the Gales in Dulwich Village. Nice. I don't think she lives in the hood, but we've seen her around.
I don't think I would go all that way just to say if she was behind buy her a coffee.
I don't think I could say what I want to say.
Which politician would you most like to be in front of in a coffee queue? Because if you're behind them, you don't control anything. If you're in front, you control the conversation, don't you?
I know, yeah. I can tell the people I have been in front of. Lagarde. I have been in front of...
Wait, we talked about that show Bingo yesterday. Are you ready for it?
I have been in front of Trudeau, Gordy.
All of these in the coffee queues?
Yes,
Davos has a big coffee queue.
They have a big coffee queue. And also there is a reason, before you jump into the conversation, trader friends, and leave your comments here, I wasn't cutting the line. There's a real reason why Humble Me was in front, and that is because that coffee area is in the middle of the Congress Zentrum. And so when they all come out from their respective private meetings, they then head to the coffee which is in the middle. But because I'm already out there waiting, I'm ahead of the line,
ready to swoop.
Yeah, and then but who would I like to meet?
UK politician.
I would like to see whether it's all there.
I went to Frankie Boyle live last night, and he does these comedy shows, and they're little a testing ground for his upcoming tour. And his description of Keith Starmer was, "Aye, Keith Starmer, aye, Keith. He's like that when you buy a new picture and the photo that's in the frame of just this blank person. He's like that. Or maybe Asda's got a store manager from Birmingham missing somewhere." That was his Keir Starmer take.
I do think an improvement, though, from his predecessors. I mean, I'm not a Bojo fan. I'm going to put that out there right now.
Underestimated.
But what I would like to say is, do you know that Keir Starmer's nickname before he became PM?
Do go on.
Keir who?
Yeah.
All will be revealed tomorrow.
That's right.
Yeah.
Good. A very good morning to people in the comments. We've got Monkey Man in already. We've got Neil, is that right? KBL1, and Dan Sand joining us in. Dan, are you in the States? Is that right? Are you having a late night there?
Dan is from the States.
I think so. From the States. I don't know if you're in the States. But yeah, good morning to you all. VW closing 3 plants. Monkey Man wants to get into the overnight action. Let's do exactly that.
I love that jingle.
And that's a good plan because we've got lots to go through. I think the one that we'll start with this morning, HSBC. two big buybacks in the FTSE this morning. HSBC is one of them, 3 billion of share buybacks. I love HSBC reporting because we do get the move in Hong Kong to give us some kind of guide. So up 3%, 3.5% in Hong Kong on the back of better than expected numbers. There's all the details from the Financial Times for you. 8.5 billion against 7.6 billion last year. High dividend yields.
Yep.
It's got solid numbers there. That looks like a very interesting one to be involved in there. It ranks highly on our tip ranks as well.
Yeah. And also look at the share price. I mean, the share price really has been on, you know, an upward trajectory since pretty much the 28th of October. But if you take a further out view, it has been on the rip. This is a 1 minute, but let's give you a daily chart here.
So that's going to break out, is it? It's up 3% from that close. That's £7.10. Where does £7.10 take us?
£7.10. Let's see. Wow.
Oh, you had it there, I think. That's going to be right at the high of that chart.
Yeah.
Yeah.
So around there.
Yeah, so right on the breakout territory. So that's going to be one to watch this morning for sure.
What's also interesting about HSBC is that unlike many of the other banks, it's one of the ones that has held true or truest or truer, if you like, to their ESG, you know, credentials, and they do look like they are trying to make, you know, a meaningful difference, shall we say, and pouring money into Asia,
I was about to say, is this a segue into BP? Because
BP, all I can say is loony. I mean,
oh, he's long gone, isn't he?
He
BP
is.
reports lowest quarterly profit since the pandemic. Now, underlying profits of 2.27 in the third quarter. That did beat analyst estimates, though. And they also announced a 1.75 billion buyback just for the next quarter, third quarter of 24, 1.75 billion buyback. So that's an annual buyback of 7 billion. So these are, you know, some real FTSE buybacks that we're talking. Makes sense. Both these companies on relatively low valuations against global peers, and then of course the FTSE itself on that 13 times earnings against the S&P 22 times. So what else are you going to do with the cash? Buy your own shares back.
Yeah, and try and boost them somewhat, because BP shares have been absolutely hammered. Don't know whether you're still in your BP trade. Are you, Rich?
I am indeed. We're still long a bit of BP, still long the EasyJet from yesterday, and still long IAG. So you can see I've got a short oil bias there with the long. There's the update on the positions. Yeah, so let's see how that BP is indicated. I'll check if I've got anything yet.
You are brave with that BP, I have to say.
Brave or stupid? Up 1% is the pre-market. Right, what other numbers do we have, Anne? There's lots in there, isn't there?
Yeah, we had Ford overnight as well. Ford coming out with negative sounding news. Let's have a look at that for you. They actually have already been on a downward trajectory, but they've also yet again weakened their profit outlook. And what's interesting as well is the fact that, you know, everyone talked about this EV revolution, right? And how it's all going to change everything. And I mean, let's face it, it's not new anymore. We've been here for several years, but they're still struggling. And what I was disappointed to see here, because I do like trading auto stocks, is that it did say and indicate, this was in an earlier red alert. These are the alerts that come out before the whole story's been written, and you get them on Reuters and Bloomberg as well. At Bloomberg, we used to call them red stickies, and they're still struggling in China. Many of the car makers, including General Motors, also struggling due to high competition in China, which is why this plays into my palladium belief, because I do think that in the very far future, we'll find that hybrids are the way to go to kind of appease everyone in oil producing and non-oil producing countries as well. Ford, one of
Guys,
the
there's
only...
the numbers there on the CNBC story. If we can pop that up on screen, thank you.
There you go. Low end of its previously announced earnings forecasts. And the other interesting thing is they kept on saying the word competitive. It's going to be a competitive, continued competitive markets. And so this to me means, you know, maybe further downside for longer.
So yeah, so looking down 4% after hours last night. Let's see where it is in the all sessions. Now, Santander says its quarterly profit rose by 12% to 3.25 billion. Retail businesses in Spain and Brazil reported solid performances. So we've got Santander looking flat. Market's taking that as a little bit of a nothing done, expected flat there. Novartis, however, is looking up 2% pre-market. So they upgraded their guidance on sales. I think it was from high single digit to low double digit. So Novartis, solid numbers there, delivering stock expected up 2% first thing.
Do you like pharma stocks? Do you trade pharma stocks?
I know it's ones that I think it's a little bit too anything could come out about a drug trial that is just comes out of nowhere, and I have absolutely no experience in the medical field. I invest in Astra and Glaxo in my pension for the long term, but I learned not to play pharma in 2001 when I had Elan. Do you remember Elan?
Oh yeah.
I think I got hit 25% in a day. I'd put some of my student loan into it.
Oh my God.
And and it came out, there was all the controversy and everything, I remember. In fact, I think that was one of the problems with a certain hedge fund in the US. I think there was potential allegations of insider trading in that stock.
Oh right.
Yeah, that's how a certain hedge fund with the owner who has his initials, or used to have his initials, one of the traders got accused of insider trading in that one.
So trader friends, someone in the pharma field taught me a long time ago, if you trade pharma, try not to trade single therapies or single breakthroughs.
Yeah.
Try and trade bigger themes, right? So the obesity theme, or the diabetes theme, or like your long play with Astra and Glaxo. For a while I was trading the COVID theme, right? And then shorting the COVID end, right? Theme.
Right.
So try and go big, because like Rich rightly said, you know, anything could happen. Bitcoin, oh, my kryptonite. I didn't touch this, but look, surging to near 71,000 amid election hopes and positive technicals. I just find this too volatile. I tried trading MicroStrategy and got burnt on that as well. It's just so, it fluctuates so much, and I'd love to hear from any of our trader friends out there, Dan, Monkey Man, any of you, or Andrew, if you trade this and if you've done so in a consistent way, because this is my kryptonite. I just, every time I touch Bitcoin, I just get burnt.
Within touch and distance of all-time highs now, though. I think 73,000 around there, I think, is the all-time high. So
if you whack up, can you whack up, Rich, the moving average? Can you whack that up?
Now let's see. So indicators and moving average. There we go.
Yeah, so I have a feeling, if my eyesight doesn't fail me, that that's forming a golden cross.
Do you want to get down into the, there we go.
Yeah, so, you know, where the indicators have crossed, and the golden cross is when the 50 and 200-day moving average has crossed. So the 50's gone above the 200, I believe. And so that is a positive.
And of course, one of the Trump trades, right? That's very much a Trump trade at the moment. So.
Yeah, the election hopes. But I also was trying to kind of dig up some statistics yesterday at about 4 p.m. when I was trying to decide whether or not to buy more palladium, and then I found out that platinum, I wanted to put a trade on that, but for some reason the market wasn't open. So then I looked at other things and wondered what happened the last time Trump won. Do you remember?
Well, yeah, I was in a hostel in Costa Rica watching it all.
He's always in some exotic place. Show off. Show off.
I don't know. It was an $8 a night hostel. I'm not sure if that showed off too.
You sure you weren't kind of like out there with champagne and trading gold again?
No, because the S&P was limit down 5% at one point.
Yeah.
Yeah.
And there was a real kind of like shock reaction initially, right? So I'm just trying to kind of position my mind if we're in that situation again, because boy, are the polls tight.
Extremely. Do you know there's a story about you in the FT this morning, Ange?
No.
Yeah, we're getting famous. We're getting famous.
Lies. All lies.
Well, hope it.
All lies.
Well, hope it is lies, because if we go to my screen, China loses and we declines. So I hope you are still in one. Is that right? You got 1,185 billionaires in 2021. The number of dollar billionaires in China has been reduced by 36%.
Well, I'd like to hope so, because I've been listening to your risk management and Axel's risk management advice. For those of you listening into that as well, I did get the name of that index that excludes the Mag 7, well, NVIDIA, I think.
Yes.
And it's a really cool name, actually, because I asked Axel for it after, and it's called, very handily, it's a very short name, XMAG.
XMAG, genius. I love when they come up.
XMAG.
And is it an iShares one?
I haven't had time to search it up. I just got the name from him quite recently.
Excellent, right.
Because, so, trader friends, those of you that missed this yesterday, I asked yesterday, I said, I've got so much of Mag 7 in my pension funds that I'm getting really, really uncomfortable. So my question yesterday was, how do I diversify away from the Mag 7? Because the weighting is just incredible now. And so Axel said there was this index that, I don't know whether you'd heard of it. I'd never heard of it.
It's only got 2.5 million assets under management. I thought it would be a lot more popular than that. It's by Defiance. I've not heard about Defiance as a ETF provider before, but yeah, the XMAG. So if we want to go up on my screen there, please, guys, the XMAG, first ETF offering exposure to the S&P 500, excluding
XMAG,
the Mag 7. So, but
really, so I thought it'd be bigger as well.
Yeah. So I mean, I guess it's only just launched, isn't it? But that's an interesting one.
Yeah.
Expense ratio 0.35%, so it's a lot more expensive. And yeah, haven't heard about Defiance before, so if anybody's had any
if you were to tell me to guess which ETF provider, I would have gone like Wisdom Tree, right?
You would think that would be a popular one,
Yeah.
Or one of the more well-known ones, let's say.
Right.
Because that's just is great for an opportunity for portfolio diversification, of course, because what of course a lot of people, what Ange realized is that in so many ETFs now are loaded up with these 7 stocks, because if you didn't have them, your ETF underperformed.
Yeah, and then you look terrible as a fund manager.
Yeah.
I was surprised how difficult it was to get away from it. Even some of the Islamic ones, I am invested in one of the Islamic ones, just because I was searching for diversification. But even the Islamic ones have the apples and they have the Mag 7, like maybe not all 7, but they have at least one of them.
Yeah, which has been fantastic. And it's really every fund with these in it has great performance. The problem is when it starts to roll over. And when these 7 names start to roll over, then you start to worry about that concentration.
Would you notice that one of your favorite stocks, Adidas, did have something happening today?
This number's out in Adidas. They have met their estimates, and stocks looking up 1% pre-market. So Adidas up 1%.
And Boeing as well. One that I know you.
That was a short on that announcement yesterday. First of all, it was going to be between 10 and 15, and then it was 19, and they've actually come out and raised 21 billion to stop themselves getting downgraded, the debt being downgraded in the future.
You also look at airlines just wanting to kind of, if you want to knock up Lufthansa, because Lufthansa confirming guidance, seeing strong demand through year end, and although that is the line, producer Fred saying it's indicated down.
Come on, there we go. Right.
So
Lufthansa, a year-on-year fall. International airlines and spiraling costs. Well, that's not going to be great for my airlines, is it? There we go. Lufthansa's passenger airlines generated operating profit 1.2. My expenditure is in there. It's in those numbers. My German girlfriend and I use Lufties to get back to Frankfurt. Must say, we can either go EasyJet to Berlin, or if we're going to Frankfurt, we use Lufthansa. Completely different experience. EasyJet is just so much better.
Really?
So much better.
I was going to ask you, how do they compare? I've never flown Lufthansa.
Yeah, it's their cancellations, their delays. Yeah, just, you know, themselves and British Airways. Yeah, bit of a struggle. It's just a struggle to get things done. EasyJet, boom, in, on, out. So
favorite airline of all time?
The South American one. I think it's not. Is
this because they gave you Argentinian steak or something?
No, they just know it's no frills. You know, just incredible airline.
Right.
I'll get the name of that for you, and we'll see you after the break. We'll be back for the opening bell with all these big earnings Tuesday.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into three key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
In here. We need a bell in
We
here.
do need a bell.
Right.
Do need a bell.
Right, here we are, opening bell, and 3 minutes ago, what are we looking at? We're looking at HSBC, we're looking at tons of other earnings are out.
Got a very good bit of research.
Earnings are out.
Got a very good bit of research from Numis, thanks to Numis for sending over their HSBC research this morning. Q3 repeat, no real new guidance yet, consensus by 7%, and a 15.2 guidance is unchanged in energy until the full year. HSBC elsewhere, they're calling Foxtons up 1 to 2%, BP up 1%, and Pearson up 2%. That's one we didn't cover actually.
Why are they saying Pearson up 2%?
9-month results on track to meet full year expectations.
Also, if you're looking at elsewhere and you trade currency crosses, we've got the UK Lloyd's Business Barometer falling to 44 versus 47 in October. Confidence has fallen owing to budget concerns, they say.
Now we've got a lot of chat going in on the YouTube. If you're not on the YouTube comment sections, you're not involved. So get on there. Come and join the discussion. Two important questions in there. How long since the Bitcoin halving? It was roughly about 27 weeks ago. 27 weeks ago off the top of my head. About 27 weeks ago only. Professional
Premium clients.
For premium clients, interesting fact. But what do we know about the charts there?
Professional clients and not for Anne.
Only. Professional
Premium
clients
only.
Man, isn't Nvidia now worth more than... Yes.
For professional clients and not...
UK economy GDP is expected. Another question from Monkey Man. Isn't Nvidia market cap 3.45 to be just over 3.1 trillion? Nvidia now worth more than the UK.
Which is why I'm trying to diversify.
Nvidia market cap 3.4. Absolutely right. NVIDIA
right.
market cap. Just in
Heard it
case.
here.
Just in
Heard it
case.
here first, people.
Just in
Heard it
case.
here first, people.
Just in
Heard it
case.
here first, people.
Just in happens today before NVIDIA.
BC and also BP. 5 seconds.
that time.
Oh, it is that. Take a look at the
Oh, there.
Ooh.
Exciting one this morning, isn't
I'm looking out for HSBC and also. Oh,
it? Oh, there it is straight away. HSB. Exciting one this morning, isn't it?
it is.
I want to get my numbers right here. It is straight away HSBC up 200 of those going to want to get my numbers right here. What is 200? No, 2,000. What is 200? 2,000 shares, and I want a take profit. That's points away. I always get.
You're going to use your trailing.
We are going to use the trailing stop. That's exactly right. Do you want to just cover some of the other moves there?
Yeah, so we're also looking at quite a few other stocks today. BP is one of them. As we mentioned earlier, BP is also key. Is that a few other stocks today? And what is also key as we mentioned, announcing a 1.75 lower. BP announcing a 1.75. That's 1.7 billion despite its share outlook. They're still talking about outlook full year in products. BP continues to expect a lower refining margins relative to 2023, but it's doing the share buyback. I guess it kind of makes sense. Especially in a time when it's trying to boost and lift its shares, which have been heading south for some time.
So there we see. So down 90 basis points on BP. EasyJet joined them down 60 basis points, of course, on the back of those poorer than expected Lufthansa numbers. Lufthansa down 70 basis points, Air France down 60. Ryanair is just open unchanged there. And now, what else did we have in the UK? There it is, HSBC up 2%. I've just bought some at 206.90. I have put a 694 stop on it. So looking for the break higher on the chart above 711, was it there? 711?
Nice number, 711, easy to remember.
Standard Chartered also up 1.7%. So Standards obviously benefits from in sympathy the HSBC numbers as well, but it does have numbers tomorrow, Standard Chartered.
Taking a look at the all sessions as well, because don't forget, trader friends, we have an added advantage here this week. We get all sessions 1 hour. That's right, 1 whole hour in advance because of this time clock change, this annoying thing we have twice a year. But for us, it's really special this week because you get to trade all sessions. You get to take a position 1 hour earlier, just this week only. MicroStrategy due to Bitcoin up more than 5%. I lost money on MicroStrategy before.
If we want them slightly more zoomed in, there's
Clean Spark also up 3%. Mara is also up 4%.
Well, let's look at Ford, shall we? On the downside, down 5.5% Ford. You were considering doing something there, weren't you?
I'm going to close out because I did go. I was thinking about it going on, but I'll close to make sure that that doesn't run
Boeing
away.
down another 1.6 as well. Why am I not short Boeing? This is frustrating.
But we have also. Did you check on Lufthansa?
Yeah, Lufthansa down 70 basis points.
Right. Why didn't I trade MicroStrategy? Because I got burnt last time round.
Yeah, up 5 there on MicroStrategy. Right, back to Europe then.
Sales missed estimates. Foxtons, you mentioned that was indicated.
Up 1 to 2.
Yeah. Acquisition of Haslam's and Imagine Property Group. Is it still up?
I don't have Foxtons on my list actually. I'm just watching HSBC as it's approaching that important level.
7-11?
So we're good. Let's have a look at exactly. Oh, excuse me, getting too excited. I'm coughing, choking on my chocolate croissant.
What's your limit? 7-11?
No, that's where we're saying that it's a potential breakout, didn't we?
Yeah.
So where do you think, my technical analyst specialist, where do you think that
Well, I think breakout could be at about, well, 711, and if we break through that, then 720, which is the last high seen in May 2024.
May 20. That's the high, is it?
Yeah, that's the high in May 2024. So if we break out of your 711, then the next level is 7.
Right.
Yeah.
So we're looking at the one from July, the 31st of July. So just before that August the 5th Japanese carry trade debacle. Then we go back to May at the 724 level. So that's the two important levels to watch in HSBC. So we're going to keep an eye on that one. I have bought some. I like the numbers. I like the buyback. And I also like that dividend yield. Oh, it's chunky.
It is chunky. I mean, most people buy HSBC for the dividend, right? Banking stocks, dividend
Well, including
stocks.
themselves. Including themselves. Another 3 billion buyback there.
But let's take a look at Pearson, because that was also indicated to move. That's Pearson up 1.6%. That is the 1 minute chart. It is now up 1.6%, that's right. And this was because there was an update earlier. AI helps Pearson grow sales 5% in the back-to-school quarter.
Right, losers of the day on, it's our friends downstairs in the same building as us, failing to deliver, down 1.3%, Deliveroo. Haven't used them this week yet. I've been good.
Do you know, I used them early on and was so disappointed I just didn't use them ever again.
Oh, really?
Yeah.
Oh, it's one shot, yeah, one shot wonder.
Yeah.
Anglo, yeah, the mining stocks not really doing too much today. So Glencore down 20 basis points. Reminder, that was upgraded yesterday at HSBC to a 465 target. They're trading at 404. EasyJet struggling along with the Lufthansa results, even though oil is around the 67.5 level. Vodafone, yet again, that buyback. There was, now Vodafone we have to go over later because there's a story on Xavier Niel. Of course, he runs the company Iliad, and Iliad have very generously offered to come in and help out Swisscom and Vodafone in Italy by buying up the problematic parts that the regulatory boards are having quarrel with.
So buying up the crappy bits.
So I don't think we can call them that. The Italian regulator is now looking into investigating the Vodafone Swisscom deal for the Italian assets, Vodafone Italy. This has caused some concern. It looks to me like the number of shares being bought back every day by Goldman Sachs has been squashed right down to 1 million or less a day. Reminder that was running at 12 million shares a day. But because the Italian regulator is looking into the deal, that would mean that the €8 billion income for Vodafone is not guaranteed. Has this meant that they've scaled back the buyback to a slower amount and therefore not giving the support to the shares that it previously was? If you look at the RNSs on Vodafone recently, you have seen a lot lower transaction in their own shares. Let's see where that has been. So here it is. Iliad looks to swoop on Vodafone Italian assets from the regulatory case. So reminder that Iliad wanted to buy the whole of Vodafone Italy and they bid for them, and Xavier Niel has a stake in Vodafone and was not happy that Margherita wasn't going to sell the Italian assets to him. So he looks like the regulator suddenly decided that the merger could restrict competition in the fixed line wholesale service market. And therefore, if you want to pop up that story again, please, guys, because this is the important one here, right? If Iliad goes ahead and buys Vodafone's Italian assets, that could become available once the regulator rules on a planned tie-up. That means the deal goes ahead then, and that 8 billion euros comes back to Vodafone. So there might be a little bit more confidence in being able to continue with that buyback. So that is one to watch there, but it has hampered the stock since that announcement on the 16th of September. Vodafone was trading at 78 pence, now trading at 73.20.
I feel like it's been buyback week. Don't you think? HSBC.
There it is, HSBC.
Whoa.
There it goes, 714.
Woo.
Right.
Take profit?
That's absolutely not. Made the same mistake yesterday. Watched EasyJet go up to 526, was it? You told me to take some profit.
EasyJet.
And now I'm looking at them 516, and I'm down in EasyJet. So, you know.
What is interesting?
Never went broke taking a profit, Ange.
I know, that's right, totally. Black is good. Being in the black is good. Adidas, one of the stocks you talk about frequently here. Top Adidas shareholder cut stake to 3.5%. Did you see
That's why
this?
it's been going down. Who's that shareholder?
Group Boucher Lambert. Never heard of Lambert. It's the investment holding company for billionaire Frere and de Mare. Right, so they've cut their stake from 7.6 to 5.1.
Ah, GBL. Right. GBL. Yeah, cutting its stake to 5% from 7.5%. That would make sense why there's been pressure on the share.
Yeah.
When there wasn't any sort of negative story around.
Exactly, and also they came up with that positive, or seen as positive update, but the shares just fell nevertheless.
Yeah, up 2.2% this morning on the back in numbers, now regaining some of that. Ubisoft also up 3%. Did Ubisoft, did they give numbers this morning? Or is it just, no, that's later this week.
Yeah, I think it's later.
That's interesting, up 3% ahead of giving numbers. Quick look at UK retail here, much of a muchness. Fraser's Group up 60 basis points and Next down 40 basis points. Yeah.
So quite a busy morning here. Just taking a look at the indices for you, because you know, many of our clients here trade indices. The Tech 100, which mirrors the Nasdaq, pretty much flat. Germany 40 up 0.5%. And what we're also seeing is up 0.5% for the France 40 as well. The FTSE pretty marginal there, just up 0.1%. Let's just have a look at some of the individual movers for you in Germany. Adidas, as you mentioned, up 2.2%, and that share sale, I guess, has also caused and is the reason why that share hasn't actually been moving higher than it has. There was no timing given, though, for when they sold those, that stake. Porsche also up, Rheinmetall also up, and in terms of the losers list in Germany, Volkswagen, Bayer and Siemens.
Now, going back to the old sessions, we're seeing an interesting move in Boeing, right? Boeing opened the old sessions down 1.5%. It's now unchanged. So is that an early indication of confidence in the airline or airplane manufacturer? Boeing back to the 150 level. It is holding 150. Reminder, they got away $21 billion of stock yesterday.
Now, Plug Power, one of the most traded stocks here on the IG platform, is up 14.3% at the moment. Plug Power, really volatile. If you're looking for volatility, this one gives you a lot of that. Sometimes with no apparent reason whatsoever. So the last story we saw was 7th of October. If you know why Plug Power is moving that much, let us know. But it's quite frequently in the top 5 of most traded stocks here in IG. Looking elsewhere, let's have a look at the FTSE once more. Here's a look at the gainers. HSBC, top of the leaders board, up 3.2%. Standard Chartered in second place. Pearson, Prudential and Reckitt Benckiser are also higher. On the losers list for the FTSE, Burberry, EasyJet and Anglo-American.
Now let us know in the comments section, what are you trading? What are you looking at this morning? What's the stocks of interest? And we'll be sure to keep you up to date with what we're seeing there. Or would you like Ange to look at technical analysis for you? Would you like to see where the support and resistance are? Drop us a comment into the comment section.
There. You have no idea how many times it pointed the wrong way. Right. So I wanted to ask you, would you recommend what you went to watch?
Frankie Boyle? Oh yeah, absolutely. Hilarious, but there are some points that you just think, where on earth has he come up with that from? He just launched a new book. That was one of the reasons for the show last night at the Leicester Square Theatre. But my friend Scotty took me for dinner before. This is my old colleague from Credit Suisse. Yeah, beat me up, Scotty. And yeah,
Can I get the power to the thrusters, Captain? I can't do that.
That's the same Scotty. Yeah, that's the one. And but I did have a meeting with Tom Sosnoff and the guys about the UK tour, and had to take the meeting in our Chinese restaurant. Nice. So I was sitting there with headphones, thankfully, trying to sneak a bit of dim sum in while the chat was going on. So yeah.
Yeah. What is the food good? I mean, where were you eating?
I couldn't tell you the name of the restaurant. It was in Chinatown, just next to Leicester Square Theatre. So we had to find somewhere that was relatively quiet. So that, I could actually hear what was going on in the meeting. So anywhere that had an upstairs and looked like the pictures of the food on the menu were good.
Oh. Just a few other notables, also looking out for some update from Lloyds after the share moves yesterday concerning Lloyds and also Close Brothers. Look out for the Times. They've highlighted a recent rush to buy gilts by retail investors ahead of this week's budget, apparently. AJ Bell reported a 71% rise in volume of gilts purchased in September versus August. And it's a huge week. Rich and I constantly reminding you, huge week for inflation, consumer confidence, GDP, but also Jobs Friday, right?
Jobs Friday is going to be huge. We get not only do we get non-farm payrolls, unemployment, but we also get ISM manufacturing on the same day. Only happens, I think, once in probably once a year, or twice every 2 years.
I think it's more
three times every 2 years, if that makes sense. Yeah.
Yeah, you get the line, right?
Yeah.
So loads and loads, and the action, of course, is also going to, and I really like trading US stocks. So we've got, before the open, PayPal, McDonald's.
McDonald's is today, that's right.
Pfizer, Crocs. Did you know that a pair of Crocs now, on average, costs, I mean, not that I own a pair, but I was shocked. A pair of Crocs, basic. Guess how much? Do you own a pair of Crocs?
This is the stock that would be my biggest short, because of the fashion.
It's so expensive. It's like 70 quid or 69.90.
But there's a story this morning.
Is there?
So Ronnie was just telling me that they've been banned in 18 school districts.
Because
children were wearing them to school, and no longer. So we'll have to get that story. I'm just looking for it.
I mean, I would imagine if you ran on them, they'd be a trip hazard, right?
That could well be what it is.
But 70 quid.
Oh, well done. That's exactly what it is. So Gen Alpha keeps tripping and falling over their own Crocs. So schools are banning the shoes over safety concerns.
There you go.
There you go. So teachers berating their students for running through corridors have a new hallway hazard. So Crocs getting banned. They do have numbers today.
Yeah. You didn't need a a shoe specialist to tell you that. Just
Great call.
they just don't look good to run in. Royal Caribbean also before they open. I don't think they're the ones. I read somewhere that they're trying to mimic this shake your phone for champagne.
Is that the Greg's one? No.
I don't know, but there's one of the cruise ships. They have that, and apparently they've got waiters running everywhere pouring champagne just because there's this app that they've got. I'm serious.
It's fantastic.
Right, and we've also got the PCMs running a quiz, and the quiz is if you think HSBC's share buyback was big, have a guess of the biggest ever share buyback. Which company announced the biggest share buyback ever so far?
History.
Yeah. And on that note, we'll be back soon with Confirm and Send.
Great, welcome back to Confirm and Send. So a reminder, this is when we answer your questions that you send in to ask@ig.com. Send us your questions, and producer Fred pops them up on the screen for us, and we do our best to bring you those wise answers, Ange.
Yeah.
Ange's answers are wise, not sure about mine.
I would like to say that in my humble opinion, I've had to learn from my mistakes, and there were many.
That sounds like the start of a song. Right, let's go on to question one. Producer Fred, what have you got for us this morning? What is option Vega? And should I be worried about it? That's a great question. So this goes back to our very first few days on the show, and I was sitting at home where all you are now, and my first question to Frank Cabernet was, I get nervous when vol reaches 25.
Yeah, 25 is your scary number.
What number of volatility scares you, Frank? Do you remember the answer?
Yes, he said no volatility scares him. In fact, they hunt. Options traders hunt and trade volatility.
That's exactly it. So option Vega is the volatility, right? That is what the Greek code name for volatility is. And that is basically feeds into your fear index. It feeds into the option pricing, but the level of volatility, how exactly it's calculated, I'm not sure you want to know, but take the number of trading days in a year, and then you want the square root. So the square root of the number of trading days in a year works out about 16.4, and that 16.4 gives you an expected move of 1% a day, right? Every day, higher or lower. So if we go on to the Tasty platform, we're going to have a look at the spiders. How do you get that expected vol? Let's take a look at 45 days out. Where are we? Yeah, December is now only 52 days away.
I know, right?
We're getting close.
Whilst you're looking for that, Dan Sen has asked, hey, about Vega, is there a derivative that measures the rate of change of Vega?
A derivative that, say that again, sorry? I'm in the middle of trying to find it. Let's,
Is there a derivative that measures the rate of change of Vega?
So there's to find the rate of change of your delta, then you've got that. But is that what's mean? Dan, if you want to clarify that question, we'll come back to you on that. But if that's what you mean, the rate of change of your delta is your gamma, right? But if that's what you're looking for. Now, if we have a look at the percentage here, this is the at the money level of Vega, level of volatility, and it's 18.2. So remember I said that a 1% move every day was 16.4, around that level. Then 18.2, so expecting just a slightly higher move, about 1.1% a day, up or down every day until expiry, which is 52 days away on this contract. So if I zoom out, you can see this wonderful, tasty platform, and that is the 580 level strike on the spiders. So that is the implied volatility, right? And then the difference between implied volatility and actual realized volatility is, of course, what actually bears out. So implied volatility, when you put an option on, when you're buying it, obviously, if you think that the realized is going to be lower, then you want to sell that and take in the premium.
If only we could have the, you know, I keep saying this to Baby Shark, of course, if everyone had it, we'd all be in the money, right, or up money. But if only we had like a realized volatility rate, or I love how the option side of thing gives you implied volatility, and it's like plus minus, so it tells you it could go up by 8 or it could go down by 8. But how nice if we could have like just plus 3 to 4, minus 3 to 4. Right, percent. That's the holy grail. Trader friends, that's your mission. Please tell me when you find out how to do that.
I'm getting increasingly bearish for a downside move in the spiders, because we're getting so many price targets come out, 6,200. It's almost becoming expected now that this S&P is going to go over 6,000, but it's struggling around this 5,800 level, or 585.
But can I also say that Tom Sosnoff has been bearish on Spider since this time last year?
Yes, I probably have as well, to be honest. Yeah, but I mean, that's what happens if you're paying attention to fundamentals. If you're going on the old analysis of what price earnings are we actually trading at here, then for me, there's just very little upside. 22.5 times earnings. Why would I buy into something that I already have to wait 22.5 years to get my money back at this year's earnings rate?
I know, but the thing is, if you went short on SPY this time last year,
yeah, you can look at this time last year. I mean, that doesn't help. The question is, what are you going to do today to make money in the future?
Exactly. But what if I go in today and then I see it go higher, and by this time next year?
But why? What's going to drive it higher? You already have to have 10% earnings growth for this to go higher, because that's what I expected.
I know, but the thing is that the trend is your friend, and at the moment the trend is still my friend.
Yeah. The route from Southampton to New York was the trend of the Titanic, and it had charts, and it still went down.
Do you know they're still trying to sell the postcard from the Titanic for 10,000? I think it was $10,000. It didn't reach its list price. And the one postcard that still remains, that was sent from the Titanic.
How did they do that?
To someone, I think it was at a port. They'd had to stop at a port for going. It was to Miss Green from Birmingham, and it said something along the lines of, "You should be here. It would be very good for you. This boat is in fine order." And that was
Well, yeah.
no chance for you to buy it. 10,000. 10,000 is a list price. Right. Dan Sands is rich. Don't need no drinking data.
And the world's biggest and longest short squeeze. And there's just too much money, isn't there? There is just too much money.
It's hunting for a home. It is hunting for a home.
But this is it. The excuse me. The more 19 billion cap raises that you get from the likes of Boeing, that is looking for. That's where the money's looking for a home. The more IPOs you get, of decent sized companies, the money's finding a home. So I think we're there. I think we're nearing the top, and I'd be more keen to protect my portfolio, as you realize that NVIDIA was in every single thing that you own. That is what's driven this market higher. The concentration around these stocks, and NVIDIA is an incredible company, but it's 3.4 trillion. How much higher is it going to go? If you want Nvidia to go up 10% next year, it's got to be worth $350 billion more. So, right, okay, can we go on to question 2, please, team?
Oh,
Missed that one, didn't
interesting.
you? What options expiration should I choose?
Oh, well, the Tasty crew have an easy answer to this, right?
That's right.
And it's that Goldilocks sweet spot, 45 days to expiry, 21 days to expiry. You know, that there is a real reason for this, and we've talked about it many times on the show. It's all to do with probability and managing your risk.
That's absolutely right. And if you look back on the Tasty platform here, so if you look around the dates of expiry, you can see here in the middle, right, that's not delta, that is number of days to expiry. So you can see the December the 6th expiry is 38 days away, right? So that's inside that level of, you know, optimal timing. So that's when the guys would say, put that trade on using December the 6th, run it for 17 days until the big expiry of the quad witching, and it's 52 days away, or do you go for the one inside and 38 days? What would be the preferred one there? That's what I don't know.
I have a feeling that they tend to kind of hold through quadruple witching. But yeah, Arsene, that's a really valid question.
Okay, question number 3.
How do you assess the long-term growth potential of a stock? Now, we talk about this a lot here on the show, don't we?
Excuse me.
I think Rich also shares the same view. I mean, I never divorce fundamentals from technicals. I use them side by side. It's like a friend, right? They're both really good friends. And
Trader friends.
Yeah, trader friends. And the thing with trying to find out about the growth trajectory of a stock, you need to not just look at the stock itself, but you also need to look at the outlook of the sector and then the broader sector as well. So supply and demand and where the company operates. So I wouldn't look at, for example, investing in a company without looking at how its peers are doing and also how the markets that they are operating in are doing. Is there enough demand or is demand tapering off? What would you say, Rich?
So I would go to our good friend Investopedia and we'll look at something called the PEG ratio. Okay, so that's price earnings to growth ratio, dividing a company's price to earnings ratio, so the PE ratio that I talk about all the time, dividing that by its earning growth rate over a specific period. So it gives you a lot more information on why that PE ratio is what it is. So it's a stock valuation measure that investors and analysts can use to get a broad assessment of a company's performance and to evaluate the investment risk. But what is a good PEG ratio and what is a bad PEG ratio? So 1 represents a perfect correlation between the company's market value and its projected earnings growth. Higher than 1, unfavorable, right? That's when you start to worry, is this stock overvalued? Conversely, if you find a one at 0.8, 0.9, that's that's considered much better, and it could be undervalued. But these things are all just clues, right? All just giving you more of an idea. A stock that always tripped me up back in the day was Antofagasta.
Oh.
Because all the other mining stocks would trade at about 13, 14 times earnings, and Antos was always at 18 times. And we questioned ourselves, why does this stock? We tried shorting it. What was actually happening was that we had the PE ratio and the PEG ratio for the first 3 years, but in year 4, they had this huge new mine opening, which gave them a 25% increase in copper supply and a big earnings boost as well. So, you know, you can't always just look at the first 3 years. Tesla's another good one, right? Tesla, he promises in 20 years he's going to be making trillions of dollars, right? From robotaxi, from robotics, from energy. And he keeps on pushing it out, but that's why Tesla is on 70 times earnings, I think
it's crazy.
So it's always worth looking a little bit further out as well to see if there's, you know, something which the market missed about Nvidia. Really, didn't it?
And what I like about that, you talk a lot about forward PE as well. And you've seen that on the show when Rich is talking Tom through this. And what I like about that from a mathematical point of view is if you're not sure about a certain stock that you are thinking about buying into or shorting, it gives you a good idea in numbers, even if you don't know what industry it's in, where it sits really quickly, and that gives you sort of an overview of how it's faring, whether it's undervalued or overvalued. I mean, quite simply.
I got to jump in, sorry, HSBC 723. You absolutely nailed it, and well done. Right, so that is, we've got 722 trading HSBC. We think there might be resistance at 724, don't we?
Yes.
Do I keep it or do I let it go?
Let me look at my 1 minute chart, which I'm looking at. I am also in the money, obviously not as big because I like scalping, but I am also up money on HSBC. And you can still hold because at the moment my minute candles are still heading higher.
Okay, I'll change that limit to 714 then, do you think?
Yeah, 740 is safe.
Right, 1714 stop. There we go. Keeping disciplined on that one. Good stuff. So yeah, reminder, HSBC up 4.4%. We saw it break above that 711 level, and now it's gone straight, as Ange predicted on the show this morning, straight to 724.
It's all about it breaking past that high seen in July, and now we have broken past it with conviction. If you want to show up my chart, people, we were looking for this break above with conviction. It's around 704, back breaking above the highs seen in August, and then when we got past that, we're now looking at a breakthrough the high seen in May. So we're waiting patiently, and what I like to do at this point, at this juncture, is I then look at my 1 minute chart, and can you see my lovely little step candles there? As long as volume holds, and I'm just going to punch up the volume there for us, and we don't see
it's trying to get through 24.
Come on, baby.
That's a great call. I take it back. Everything I've said about technical analysis,
it doesn't work all the time, but when it does, it's beautiful. So it's still at that on the head 724 level, and we will keep an eye on that for you to see whether it breaks through. 1 minute 30 to break. Do you think we got time for another question? Everyone in the gallery is like, no. We'll be back, and we will let you know how we did with HSBC.
Just one question. Ben Buswell,
yes,
from New Zealand, from Queenstown, live, is asking, could he possibly have Ange's expert technical analysis on Upstart during the break? Looks like a wedge is forming, but not sure how to work out if positive or negative.
Okay, we will look at that.
Ben.
725, Ben.
Ben and his wedgies.
725.
We've got China stimulus headlines. James Bennett, thank you very much for that. We'll look at that. We're going to have to go to break. We'll update you now on the China headlines. We'll be back in 5.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into three key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Hello and welcome back. It is the Tom takeover. Rich has just run back in, so he's a little sweaty and hopefully we'll be all right.
Talking about running.
Yes, would you like to tell everyone the bet that we had?
Well, we spoke last week and Tom surprised me by declaring that he was going to run a competitive 5K race. Did ask me some tips.
Sure.
And what was your target?
Target was 20 minutes.
20 minutes. Now, I've only run sub 20 minutes once in my life, and it was in 2001. So I thought that was a strong target. 20 minute for 5 kilometers.
Yes, and you said, in no uncertain terms, that if I were to beat my target, that you would have 6 months, and you would have 6 months to beat my time. So I came in 1934, which means that you have 6 months as of Saturday to get your shoes on and get back to fighting weight.
What was your previous best?
2006.
Right, so a PB of 2006, and he smashed it by 32 seconds. When I heard, oh, I really want to go sub 20 minutes, I thought he was going to run like 1954 or something. That is a proper beat. Well done.
Thank you so much. Thank you.
I am in full, not in awe, of respect, I'll go for. Not
Sure.
in awe. Now, what you are underestimating, if we just want to go to my screen when I managed to get that up, this is who you're running against. That not the
granny,
not the person running, but the granny at the top. So yeah,
Is that you?
That is back in the good old days. Shaftesbury Barnet, Harrier's Great Escape.
Why? What? It captions hurdle hero. I mean, a bit dramatic, over the top, I think.
Hurdle hero, yeah, that's a bit
bit much,
OTT,
that.
isn't it? So I now have 6 months to get my overweight, undertrained, lazy,
Good for
self-
nothing.
Good, well, all right. Wasn't going to go there. 19 minutes 34.
But 26th of April.
That's my.
That should cut off date.
It's probably marathon. London Marathon's
Sounds
around
like,
then.
yeah.
So I'll run the first 5K of the London Marathon, trying to keep up with. Nah, I wouldn't get anywhere close to them.
No, you wouldn't.
Okay, right. I'll take that challenge.
Good. All right.
Talking about challenges.
Talking of challenges. So today, obviously, is Tuesday, and it's a Tom takeover.
It is.
Tomorrow, Wednesday, is the budget, UK budget. You've probably heard of that. And Thursday is another Tom takeover, which means that we are in a Tom takeover budget straddle.
Straddle.
Okay.
Great. Yeah.
Which puts us in a once-in-a-lifetime opportunity to play budget bets. Okay?
Oh, like it.
So we're going to run through a few policies that may or may not get put in the budget tomorrow. You're going to tell me if you think they're going to make it in. And then on Thursday, we'll be in a position to check, see how good you are at budgeting, see if you could be the next Chancellor.
Did I mention there is a game on the Financial Times website?
I've actually seen it, but this is way better.
This is the better version. But if anybody wants to play at home, well, play along here. Drop your ideas in the comments. But if anybody wants to play at home, go onto the FT website and search for their, Be the Chancellor game.
Yeah.
And it's great. My girlfriend and I, at least 20, 25 minutes of entertainment.
Your household sounds riveting.
It's riveting when you live with a German economist, and
Just laugh a minute.
she declares that she wants to cut all welfare spending and then move it into defence and contribute more towards NATO. That's when
Okay.
you start to get worried.
Yeah, yeah.
But she does beat me at fantasy football as well, so
Just anything really, probably running as well.
yeah.
Anyway,
No, she does.
so-
she would beat your time.
would she?
Yep.
Well, maybe we'll all have a race.
Okay.
Okay.
It's on.
Set it up.
She's my proxy to run
no.
sub 20 before April.
You're in the race too.
Right, let's go. Budget, set it up. And if you are interested in the budget, go on to the Explore feature of IG, your app, and expert analysis. You've got a full preview from Axel Rudolph there. So IG app, Explore feature at the bottom. Axel Rudolph's given all his thoughts on the upcoming budget. However, you can also watch this.
So, 10 policies. All I want to know from you is, yes, I think that'll be in the budget. We'll put it in your budget basket, I guess, if you will. And on Thursday, we'll see how many of them were correct.
Okay. Order.
So, number one, the green garden tax exemption. Homeowners with at least 3 species of herbs in their garden get a tax break for their carbon-reducing herbaceous contributions.
You've been really smart here, haven't you? You've looked up some of the most random ones that are going to come, but that is what's the negative answer?
You just don't want it. You don't want it in you're passing. You don't want that one. Fine. Okay. You don't want that one. That's not going in
It'd be order.
Richard's budget. Number 2, ISA allowance increase. An annual ISA allowance raised by £5,000 to encourage household savings and investments.
I mean, I would like that, but it's not going to happen.
I think so.
Does this include the Tories back Britain ISA? The British, because that might become real. That's the only thing. So the allowance for ISA is £20,000.
Yeah.
Right. Now the Tories come up with this great idea: invest in Britain. You can have an additional 5,000 allowance on a British ISA. But I think, does it include that?
Yeah, as long as the ISA allowance goes up by £5,000, that's the kind of.
I think it should, but it won't.
You think it won't? Or we might be missing out on valuable points there. Okay, number 3, the high stakes hospitality.
Well, it's a win-win, because then I get to put another £5,000 in my ISA.
But you lose the game.
Would I rather beat you or no? I'd rather beat you.
I know you would.
Yeah.
Okay, so that one's not going in your budget. That's fine. Number 3, high stakes hospitality subsidy. So grants for pubs willing to live stream major political debates, blending civic duty with happy hour.
Well, would it be Prime Minister's questions?
I mean, it's open-ended, isn't it? It's any kind of major political debates.
It's going to be better than that. Eat out to, what was it? Eat out to help out.
I made a fortune on that. They were paying me.
You made a fortune. That didn't help you get under 20 minutes for 5K.
No, it didn't.
I think that's rubbish.
Okay, so you're not putting that one in. Fine. So you haven't put any in yet. That's fine. Number 4, the green.
But if they're not in, I win.
No, basically, you're going to get a point for anyone that you put in that do come out in the budget, but you'll lose a point for any that you put in that don't end up going in the budget.
Okay, but as long if I say no, as long as it doesn't go in,
you're okay.
Perfect. So you don't know the answer yet.
I don't know the answer.
Excellent. Well, stop trying to tell me that I'm wrong then.
Number 4, green bond expansion. Okay, the expansion of green bonds for public infrastructure projects to support sustainable investment.
Yeah.
You like that one?
Yeah.
That one's going in?
Get that in.
Finally. Okay, you like that one. So 1 in. You like the green bond expansion. Number 5, the scone support scheme. This will be tea rooms and cafes serving traditional scones with clotted cream receive a small subsidy to uphold British culinary values. It won't matter if the cream or jam is supplied first.
Oh, that doesn't matter.
That doesn't matter, no.
So I think it will matter, therefore that's not going in.
So that's not going in. Fine, that's fair enough. That's fair enough. Okay, the number 6, the second property surtax. So additional surtax on second properties aimed at discouraging property hoarding and making housing more accessible.
So my friends in the old WhatsApp group, they are raging about this. Raging. So I would say that one's probably going in.
You know it's going in?
Yeah. It won't be popular.
So your friends with second homes obviously won't be happy, but you reckon that's going in? Okay.
Angeline won't be happy.
She got a second home.
What about the 5th home?
No more comments. Okay, number 7, shop local selfie rebate. Shoppers who post selfies of purchases from local shops can receive a tax rebate, provided they tag #budgetboost.
Some of these are quite good ideas. Is this your wife coming up with these?
No, this is Rachel Reeves. She was.
Well, would you do it?
Depends on the size of the rebate. No, the rebate, I reckon.
What would sway you?
You know, raise of the lower tax threshold on income tax, maybe.
Well, that's the interesting thing, right? What are you prepared to pay more tax on? What if they promised that they were going to take that money and spend it on X? What does X have to be for you to say, yep, I'm happy to pay more tax?
As in, if I know what they're going to spend the increase in tax on?
Yeah, NHS, police, defence.
For me, probably healthcare, I think.
Okay.
Yeah.
So to get a shorter waiting list...
I would take the selfie, do #budgetboost.
Or just pay more tax.
Or just pay more tax.
Do you not just take that money you're going to pay to tax and get private healthcare?
But I guess that's... I reckon you might be surprised at how much it would cost. Like I've seen some of these American bills for medical care, and they're quite insane.
Oh, I'm not suggesting that we do away with the NHS. I'm just you more personally.
Yeah.
So, for example, VAT on secondary school, on private schools. Do you pay that VAT and still send your child to private school, or do you not pay school fees at all and send them to public school?
It's a good question.
I don't think we didn't have any private schools where I grew up.
In the wilderness of
The
Scotland.
wilderness. Yeah, there was no. You just went to school.
Just the local school.
Just a government school, innit?
We did well, and it produced an average athlete. So that's,
An average athlete, and Frankie Boyle, who I went to
and
see
Frankie
last
Boyle.
night.
He's good, isn't he?
It was very, very funny.
Has he toned it down at all, or is he still? No,
He's gone
full in.
extra. Yeah, yeah.
Yeah, you know, you see people getting cancelled, and you're like, surely Frankie Boyle's next.
How is he
And
still brought on the BBC? The royal family for the Queen's, was it the Jubilee 3 years ago?
I don't know.
Yeah, it was. I think it was the Jubilee. They invited him along.
He's the last person you'd think would be appropriate.
Yeah, as a part of British culture. Right. Okay. So that one is not going in. The selfie's not going in.
That one's not going in. Okay. EV, electrical vehicle subsidies. Okay, new subsidy for electrical vehicle purchases, particularly for low-income households, to support the green transition.
They kind of have to, don't they?
You think?
Yeah, that'll go in. EV subsidy.
So you're putting that one in. Some kind of subsidy for EV
Sounding
vehicles.
very green at the moment. We've got green bonds and subsidies for EVs. This is not a personal political viewpoint.
From me,
No, this for me.
for you.
I'm just saying that I think this is what's going to happen, not necessarily.
No, you don't have to do. We can do a disclaimer at the end if you want. These are not Rich's actual opinions.
Or of IG.
Or of IG, exactly. Number 9, AI tax credit for businesses. So a tax credit on AI investments for businesses to encourage digital transformation and improve productivity.
Just to use AI.
So if they use it to, for their digital transformation to make them more productive, a tax credit on their AI investments.
Well, then you're giving tax credit for people to increase unemployment. Can't do that.
Can't do that.
No. Order.
So you don't like that one. Okay, so if you provided that's on the assumption
You're
though.
encouraging them to sack people.
Well, that's on the assumption though that by being more productive, they will need less people, which isn't necessarily true.
Right. But if you ask any CEO, if you get the chance to cut costs and improve your bottom line through cost cutting just by implementing this AI, tick, done.
Okay, what about when you would have had all these terrified accountants when they heard of Microsoft Excel, right? But it hasn't made them redundant, it has empowered them.
They should be very, very scared of AI. Have you seen the South Park episode?
On AI?
So
no.
Yeah, the only important people left in the world are plumbers, electricians, construction workers.
Yeah.
Because all the other jobs, like traders, have gone to AI.
Yeah, that'll be the first one to go.
Oh yeah, well it's already gone, to be honest. I mean, algorithms took over about 10 years ago.
Yeah, what are we doing here? Anyway, is that one? So tax credits for AI investments, is that going in?
No.
Not going in?
No, because you'd be encouraging.
You'd be encouraging unemployment. We don't want that. Okay, all right, fine.
We're a Labour Party.
I like today's voices. Okay, your final one, early bird shopping VAT discount. This is a 5% VAT discount for shoppers making purchases before 8 a.m, aimed at reducing retail congestion and reviving the British morning.
And getting people up.
Getting people up.
And out
of bed.
Back into work.
Back into work before they go home again because AI is already at work.
Yeah, that's true, yeah. So they'd be going to the gym so they can run fast 5 kilometre, sub 20 minutes.
Which can't be replaced by AI.
I don't think that one's going to go in.
Okay, so that means out of the highbrow and totally realistic policies you've been given, you've chosen 3 that you reckon are going to go in. Green bond expansion, you reckon. You reckon second property surtax. And you reckon EV subsidies.
Yeah. Now, I think the 5,000 ISA one,
Yeah.
I think should go in, but but that might be cancelled.
Okay. But we hope it does.
We hope it does, because British investing in Britain for a better Britain tomorrow.
Yeah.
Yeah.
Okay, and we'll check in on Thursday. We'll see how you did. See if you're on the same wavelength as the Chancellor.
I look forward to that. Have you been following HSBC?
They're doing restructuring, aren't they?
There's, the cost cutting there, and then good numbers this morning. Big buyback, $3 billion buyback, and the market cap's only 130. So about 2.5% of the company, they're buying back in shares. And the stock is up 4%.
Okay.
Now, there was resistance at 711, and there was resistance at 724.
Not whole numbers, or not even kind of grades of 5 and 10.
Bit random, yeah. It was from previous all-time highs.
Okay.
It got up to the 711 and it touched it, and then it blasted through and went straight up to 724, where Angeline has very cleverly taken profits because that.
Have you got a trade on it as well?
I've got a trade. I'm long HSBC, and well, the chart's got one of those silly things in it, unfortunately, Terence. You can take that down just now because it's these. We need to get that fixed. Is it all-time highs? That is the question. Let's see. Right, now we can go on that chart, gentlemen. Oh, no, we can't. Oh, my goodness me. So we're almost there. There we go. So you see that price there? So 724 is that all-time high from May 2024. £7.24. That green candle has touched it, and it attempted it, and it had a little look, but then it's dropped back down, and it's trading at 718 now.
Okay.
So tricky one. So
what are you thinking?
I'm holding it, and I've got a 714 limit on it. So if it comes back down to 714, that position will be closed. Take the profit. We bought them at 706.90 this morning, but I am looking for a move up to 736. The question is, will there be upgrades tomorrow? Right?
Okay.
If this closes at 718 today, will you see upgrades in HSBC come tomorrow? Will there be 3
upgrades being
from analysts, research analysts?
So their rating would go from what?
Oh, that's a great question. Where are tip ranks at the moment? We've got a 755 price target. There's 10 ratings, 5 buys and 5 holds. So what you really need to see is a couple of those holds at RBC, UBS, JP Morgan. You need to see those upgrade to buys. Now, Deutsche Bank has got the highest price target, £8.30, right? 20% upside from here. So we need to see what comes from Deutsche Bank, Citi, JP Morgan, and UBS.
Okay.
And that will, if those are positive, then that will give HSBC the chance of breaking out tomorrow. But if they don't do anything, then it's going to struggle potentially to get through that.
Okay, so you're particularly keen on understanding what the analysts think.
That's right. You see.
You could do your own homework, couldn't you?
Of what I think this.
Yeah.
Well, this is the great thing about this tip rank system is if you find that there's maybe 10 holds and there's only 1 buy, and a stock comes out with really good results, then there's a much bigger chance of some of those holds upgrading, right? And as you see it hit the tape, the algorithms are set that if they see significant upgrades by analysts, then there are algorithm programs that go and buy the stock.
And these will be in banks and
funds,
hedge funds.
Yeah. Any big movements in analyst consensus.
They've got tip ranks too, haven't they?
They do. But they've also got their own
I'm sure
models. And on that note, Tom, thank you very much for joining us.
You're very welcome.
Shorter this week, 2 shorts. Oh, it's just the way you're sitting. Right, we'll go on to our break. We'll see you afterwards live from the trading floor.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket. Options, a hugely powerful trading tool with a wide variety of uses. An option is a contract that gives you the right, but not the obligation, to trade a financial market at a set price before a set date in the future. You pay a premium for this right. Options can have daily, weekly, or monthly expiry dates. Say you think the FTSE 100 is going to rise in the next week. Instead of buying the FTSE now, you purchase an option to buy it within the next 7 days. This is known as a call option. It gives you the right to buy the index at a set price, called the strike, before the option expires. If the FTSE moves above the strike at any point within the 7 days, you can exercise your option and buy for less than the current market price. If the FTSE drops instead, you can leave your option to expire, losing only your premium. But options aren't just used to buy a market when a market goes up. Put options give you the right to sell a market at the strike instead of buying. This can make them a great tool for hedging. Say you own Apple stock and are worried it's about to fall in price. Instead of selling your stock immediately, you purchase an option to sell it with a strike that's close to the current market price. If Apple stock drops, you can exercise your option to sell, preventing losses by selling above the current level of the market. If Apple stock rises, you can keep it in your portfolio, again, only losing the premium. You can also use options to speculate on price movements without ever intending to buy or sell the underlying market. That's because an option premium will change over time, depending on how likely it is the option will become profitable. If you purchase an option with a low premium, you can sell it on if it becomes worth more as it nears expiry. With IG, you can trade an extensive range of call and put options on shares, indices, forex, and more.
Welcome back, everybody. So, as you can see, we've got our special guest, Jason Statham, is with us once again from the options desk. How are you, Elliot?
Very good, Richard. Good morning, Angeline. Welcome back.
Good morning. That is the correct term that Rich used. I'm looking for your swish car in the back, maybe like a, revolver, maybe an IFB there. You look really smart.
I can't say I've quite got the muscles or his build, but hey-ho.
And that was...
I've got the hairline.
That was a comment from Ben in New Zealand, one of the viewers last week, saying, how did you manage to get Jason Statham on the show?
Very good.
Speaking of Jason Statham, and I'm sure you, like Jason, have, multiple properties, some of which you don't live in. Budget coming up. What are you expecting? What are the clients saying? What's the mood music like?
Oh, she's got a tough job tomorrow. She really has. I can't see how she can please everybody, to be honest.
No, definitely.
Looking at cable vol's not as well bid as what I would have thought, actually. Looking at what's been priced in for tomorrow afternoon, you're only looking around about just shy of 0.5%, so roughly 50 points, which seems slightly cheap to me.
It is, isn't it?
Yeah. So if you were looking for a little bit of a move, it probably wouldn't be the worst trade in the world. We'll do weekly options which expire on Friday. Perhaps have a look at those. Or we will be offering the dailies from 9 o'clock tonight, expiring tomorrow at 8 p.m.
I've always wondered when that kicks in. So it's 9 p.m. the currency dailies.
Yep.
Oh, I'm going to be all over that 9:01 tonight.
Yeah, because it wouldn't be the worst trade in the world, in my opinion, just have a look at the wings. You wouldn't be paying a lot. So yeah, vol seems slightly lower than I expected.
I'm a kind of 131 man for tomorrow, I think.
131.
Yeah, on that you're not going to pay many pips at all. You might even pick that up for 3, which is a tighty spread, which for 3 ticks is a pretty good punt, I think.
Ooh, right. Yeah. Remember.
Got my hands together.
Yeah. Remember that. Two-way market. That's just a little bit of insight into getting those cheap lottery. It's not even a lottery ticket. That 131.
No.
133 might be a lottery ticket, but yeah.
Yeah. 131's pretty, reasonable.
Yeah. Next stop 120.
Ooh. What happened to your, did you hear yesterday's show when he was trying to find an acronym for, what is it? Make
Great Britain great again.
I found one for you. MUKBA. Make the United Kingdom great again. You were looking for a vowel, weren't you?
Yeah.
So
there we go.
make United Kingdom. Yeah.
It doesn't roll off the tongue.
It doesn't, I have to say. Yeah, but we have a vowel. What else is on the horizon? I mean, like other than vol in terms of the pound, where else are you seeing the action ahead of that budget?
Yeah, it's a monster week, to be honest. Obviously got some decent earnings out tonight, tomorrow, Wednesday, and then Thursday. Obviously got the budget, which is obviously certainly the main focus here in the UK. Not seeing masses of flow as of yet. As I said, beginning to see little nibbles on the weekly vol. We will see a lot more business from tonight onwards on that. Eyes turning towards the election as well. The election risk premium continues to grow. Now it's roughly 4%. Looking at the the 5th compared to the 6th, Tuesday into the Wednesday.
Wow.
The highest vol is actually on the Thursday and Friday contract. We've also got Fed coming up on the Thursday as well. So next week is as big as it's going to get. So vol is actually slightly better bid on the Thursday than it is on the Wednesday. So almost hinting that, like we saw in 2020, might take the market a few days just to consume the result of the election, hoping before the market really decides which way to go.
Yeah, I personally think that's a lot. 4% would be my level where I would start to.
Yeah, looking at what that roughly correlates to. Roughly pricing in a 1.5% move for the Wednesday, and then roughly a 1.1% move for the Thursday.
Actually, I mean, you made a good point because you just jigged my memory. The last time we had an election with Trump in it, it got till about 10, like later our morning before a firm result came out, right?
Yeah, we don't think that we will see that. That was a huge shock that night. As I said to Rich last week, we went to bed and Betfair was
You and Rich went to
1.08.
bed.
Calm down, Angela.
Really worried about what happened here whilst I was away.
Don't tell Rachel. Yeah.
Rachel Reeves was there as well.
No.
Jason's girlfriend.
After you went to bed, what happened?
As a nation, we went to bed as a nation. Clinton was 1.08. It was a done deal. We were very much right. Okay, Clinton's got in power. And then during the course of the night, we slowly saw a very steady shift back towards Trump. And I think I can remember Dow being down 1,000 points out of hours, and they actually finished up on the day after. So I don't expect those sort of fireworks, but Trump continues to gather momentum in the wider betting markets. He's now back to 1.6, did drift a little bit to 1.7 yesterday. Implies roughly a 63% chance of getting in. That's going against what we're seeing in terms of the polls. All the poll websites that I read, 538 is a very good one. Nate Silver's very good as well. Implying it's still neck and neck.
It is neck and neck. It's unbelievable.
Yeah, I saw a great explanation.
Even in the
of
swing
that.
states, Trump's got a lead of less than 1% across 5 out of the major 7. So
yeah,
extremely tight here.
We I saw a great explanation of that, and which was that the whale that came in and moved the betting market, right, probably New York or LA based, whereas the polls are taken in the swing states, i.e. you can bet from anywhere, but the swing states are the real important moves. So, and that's the discrepancy between the two. But the interesting stat was the betting market has predicted the correct result 77% of the time, and the polls 78% of the time. So they are, very, very accurate. They do a good job.
I can concur with that, because I think that if there's a really, really tight, race and margins right to the wire, really tight, the best place to actually find out what the market is going to do is actually on the floor of a betting shop. It's really weird. But I've listened to PMQs as well, and whether or not we're going, when Theresa May gambled to try and get a majority, and even during PMQs you couldn't call it, but if you went to a place and you listened to what people were saying, you could call it at that point. Same with the Brexit referendum. But just really quickly, Bank of Japan as well, you've got your eye on that. Early hours Thursday. What kind of volumes are you seeing indicated?
Yeah, and the vol isn't overly well bid. It's not highly anticipated BOJ, I would say. Expectation is there'll be a slight hawkish hold, which won't come as any surprise. Not really a big story this week, particularly. In a normal week, BOJ would be probably out there with the biggest events of the week. This week it's 5 or 6 on the list.
So tell us, with the US elections, what is the IG trading floor going to look like?
Slightly different to how it used to. Back in the pre-COVID days, first of all, we would have offered an actual binary market on it, which was fantastic. Used to see significant flows on that. It's a shame we can't do that anymore. That's for regulation reasons, sadly. So we used to have half of the wider dealing team would come in. Obviously, after 10 o'clock at night, we hand over to the guys in Australia. They run things over there. Obviously, with these huge vol events, you need kind of every hand on deck, especially on the option side, where the change in the vol can really, really shift. Now, obviously, we can work from home. There will still be several of us at our laptops throughout the night, helping to price these. But yeah, it's a shame, because I used to love the buzz. You would have almost a competition to see who could drink the most coffee. I personally don't drink it, so I was no partaker of that event. But we would often have Sky News would often come in as well and actually broadcast from the trading floor.
Oh, really?
There was a real buzz. It used to be brilliant. Yeah.
Oh, that's awesome. Like very early in the morning kind of thing when they...
Yep.
I'm going to show my age now as well, and I'm going to say, do you remember as well, like the night runs to the 24-hour like salt beef bagel place around town?
Yep,
and it was
yep.
like, yeah, one for me, and then everyone would, like, you know, eat and then continue working. Really exciting, really exciting. Did you know that Americans in some states can already vote from the 26th? They've already started voting.
Yep.
I
Yeah,
found
and
that
obviously that's
crazy
obviously
for no
feeding into the
reason.
polls as well. So
Yeah, for no, like, they don't have to give a reason. You can just rock up and vote.
Yeah.
what I will say is, I look at the market volumes that go through. So just highlighting what we've seen over the last week or two. You've got the VIX, you're still trading around about 19, when realised vol isn't anywhere close to that. Realised vol's probably closer to 14 or 15. A popular trade that we've seen over the last week or two is topside selling of mainly deck calls on the VIX, looking around the 25 or 30 calls where you still pick up a half decent bid. Seen a little bit of put buying as well. Again, looking for the VIX to return back to 14 or 15 or even 16, where clients probably think it probably should be, basis the realised vol. Once we lose this kind of election risk premium that's all priced in, I can see us going back there. It's a little bit of a weird paradox, which again I highlighted with Rich last week. You got S&P now all trading at close to lifetime highs, and yet the VIX is still up at 19, and realised vol just isn't reflecting that at all. So expect a real heavy, significant vol crush, obviously after the election, but also after the Fed as well.
Right, I've got the volatility index up as well. That's a good call. Did you just notice Rich and I writing those down to take a look later?
Yeah, exactly. Yeah.
After the show. VIX handle currently 18.5, so we'll be looking to trade that or take a position in the lead up to the elections. How about the US dollar, Elliot? Any big positions there taking or forming amongst our clients?
Let me come on to that in a second, actually, just before I forget. I also look at the volumes that go through on S&P, and there's a real significant whale out there in the market. We bought the deck 56 puts. He bought about 8,000 contracts.
Oh, wow.
In the last few days. Works out around roughly $1.5 million worth of Vega. So that's basically saying that should vol change by 1%, that's going to carry a cost to his portfolio of roughly $1.5 million. So that's a real significant.
I'm following him in on that.
Yeah, so he's bought the 56 and he bought a few clips of the 55 as well. Yeah, so he's definitely busy.
56 and 55.
In terms of the dollar,
so
obviously he had a significant run during October, up what basis 4% against the euro-end cable. It's run out of steam slightly. I feel that there's a lot of people now sat on the fence, have probably already finalised their pre-election positioning, and I think are going to wait A for the result of the election, and B what the Fed does on the Thursday. Looking like roughly, one second, I think roughly 95% is priced in for a 25 basis cut on Thursday. It wasn't long they were pricing in roughly a whole big figure of cuts by year end. That's changed significantly. Yeah, so as I said, roughly 95% chance of a 25 basis point cut in November, and a 75% chance of a further 25 in December.
I think it was Jeremy Siegel went out this morning saying he thinks you get a November hold from the Federal Reserve.
That would come as an enormous shock.
It really would. What would be the play for that? It probably is that downside on equities, isn't it? Because
it's hard because you're going to have a lot of noise around that time as well.
Yeah, true.
You're going to have a lot of election noise. But yeah, if they were to hold, absolutely, indices have got to crash on that.
The bond market's almost like trying to give a warning sign with how much yields have gone up in the past couple of weeks as well. You know, we've gone from fearing that the Fed waited too long to now, you know, they were maybe too aggressive on that 50 basis.
Exactly. exactly. Yep.
So
Yep. A real shift in over the last couple of weeks.
Yeah, I agree with Elliot. There's going to be so much noise during that time, though, and to try and kind of like take that out, I don't know. I know Rich has turned bearish on stocks. I think 2 weeks ago, you proclaimed on set, didn't you?
well, so I'm going to join your man in the 5600 puts here. So I've got up the Tasty platform, December 560 spiders, about $7, Elliot. Would that make sense?
Yeah, let me actually get you SPX, which is what we offer. It should be a close correlation, but
Yeah.
just to be precise on this, one sec.
Well, yeah, let's
Current
continue.
price on the 56 is roughly about 65 ticks.
65 ticks, right? So
yeah.
let's so there we go. IG platform 5600. Yeah, what?
Yeah, if you break even's around about what 55, 40 odd.
You'd want to make it a spread, really, wouldn't you?
Yeah.
What do you get for like a...
given the skew, you'd probably be buying the 56. 5,000. You're going to get enough on that. Yeah, I'd probably look into certainly
5,100.
Yeah, I'd be shocked if we were to say go below that. To be honest, so for 5,100, you're going to receive roughly 20. To reduce the value of that down to roughly 45, which is a bit more believable, I think.
Yeah. Right.
Probably not a bad trade.
I'm going to pop that on right now as a spread. So on the spiders, I'm going to pay 482 for a. Let me see if we can get this now. So the spiders 560 down to 510. I am only paying $4.81. So that gives me about it's 10 for 1. 10 for 1 payoff. I like that.
Nice.
Yep.
Right. Done. Excellent. Elliot, thank you very much for that. I will take you out for a couple of non-alcoholic beverages if that comes in.
And don't forget to have a look at our cable pricing for tomorrow, because that will be very, very keenly watched.
Oh yes, I definitely want to pick your brains to get that cable, because I love trading cable, and also would love to hear your thoughts on my thesis if Trump gets in.
I must admit I wasn't patient enough, Elliot. I saw the $1.30.5 weeklies were trading at 22 offered, 22.5 offered. So I've bought a couple of those. So
yeah, like that's 70 points away.
Yeah,
and a budget. The vol does seem very cheap. It really does.
Okay, so that's interesting. So yeah, so I'm in for 22.5 on those. That's Friday expiry.
Yeah, and Elliot will be back with us next week as well to talk about how all this played out. Really exciting times.
I will certainly do probably a pre-election. I might try and do one after as well. That'd be good.
Excellent.
And I'll ping you my thesis on cable.
Please do.
All right.
Good luck with Rachel.
Thank you, guys.
Cheers.
All the best.
Bye-bye.
Right, welcome back, and we are on market measures, and one of the key things that we look at here on market measures is comparing different management strategies. And let me just get up my view for you. This is a topic that we like talking about very often, and it's one that we have covered before but can't cover enough because it is very important. Just getting our producer to tell me why we need to come off full screen. Hold on. There we are. Okay, so one of the most common questions we get is about the different management techniques and why we manage our trades. This segment will use POP, average profit loss and profit loss volatility, to analyze short 16 delta SPY strangles at different IVRs to show management differences. We will then also compare the differences between managing at expiration, 50%, and 21 days to expiry. So what does managing our trades mean? What does this mean in the real world? It means closing out winners at a certain profit percentage or certain DTE. This is to avoid drawdowns and overall portfolio volatility. Now remember, many people, especially tasty traders, you don't wait till the full point. Actually, anything 50, 60% is good. You kind of look to kind of close out, and it's always good to close out in the black. Closing our losers to minimize overall losses, and rolling our trades to another strike price or expiration cycle, buying or selling an option combination.
I feel like we've got a nice chart coming up now, don't we, Anne?
Love a chart. Right. Managing winners perform well in bullish times. But let's take a look at what happens when you manage earlier. Now, what our study, or maybe Shark's study, found that managing your trades earlier meant that you did better in choppy markets and cut the occurrences of losses that it never reached 50% winner. This is data available until 2018. So it looks at all the data all the way back to 2018.
I actually just did this back testing on the Tasty platform as well. And August the 5th, you'd be amazed at how much that destroyed the back testing and how many people lost out because of what happened on that day.
I thought you hate back testing.
Well, that's it. I thought I would go for you.
Right, so the blue line represents those that managed their trades earlier, and that slightly yellow line is the managing winners perform well in bullish times, but during choppy times you'll see that if you looked at managing your trades earlier, you did much better. You basically sidestepped the mess. So while managing winners produce smaller winners, managing earlier control the losses. I agree with this because I still have an Adidas trade thanks to you that I'm managing. The average P&L holding to expiration, $63. Managing winner, $36. Managing earlier, $41. The win ratio, if you held to expiration, 83%. Managing winner, 91%. Managing earlier, 82%. And the largest loss, holding to expiration, you're down 2,485, which is the same as the managing winner. But if you managed earlier, that's
a nice saving, isn't it?
Yeah, it's a nice saving of about $500. So the crux of the matter here is if you manage earlier, you're in choppy markets, you're likely to manage your losses better. Let's compare different management strategies. The pot for strangles held to expiration remains around roughly 80% as IVR increases. The pot for early managed contracts is similar, although slightly higher for all IVR stages. There's an interesting chart there for you. And as you can tell, the managed early chart, below 20, that was higher in terms of a percentage. 20 to 30 IVR, managed early was also higher. 30 to 40, in terms of the IVR, managed early was also higher, and also over 40. As the IVR increases, the average profit and loss per trade fluctuates at expiration, but not at 21 days to expiry. This means that contracts held to expiration may yield higher profits at certain IVRs, but contracts managed early behave more predictably. This kind of makes sense with why Tasty keeps saying that the Goldilocks period is 45 days to expiry and 21 days to expiry. You had that wonderful word. For the optimal trade.
That was it, optimal, yeah.
If only I could do that with my life. Additionally, strangles managed at expiration have profit and losses that are 1.5 to 2.7 times more volatile than strangles managed early.
Wow.
Wow, that's a big jump. And early managed strangles profit loss volatilities, also steadily decrease with increasing IVR and behave more consistently, as you can tell from the chart on the right. I mean, this all points to managing early, right?
Yeah, great evidence as to why at that 21 days to expiry, you can save yourself a lot of headache.
When IVR is high, we tend to see greater profits across the board. However, we have different management strategies that can vary our performance. In periods of higher IVR, what management strategy works best? Now, in all environments, it seems like managing at 21 days outperforms all other strategies in terms of risk and return.
Wow.
So it looks like 21 days is the clear winner. But I guess some people, right, prefer it earlier, some people prefer it later, but 21 days is what they're telling you is optimum.
And I must admit, I fell foul being a kind of cash guy, right? Not being an options derivatives trader, but using the options market for just for an added bit of extra protection, or managing to get a bit more exposure to ideas that I liked. I always used to run them pretty much to expiration. And it was only working with Fabrizio Gallo back in 2009 that he kept on taking them off early. And I was thinking, well, does he not believe in it anymore? So that was my assumption. If you believe in a position, then you run it to expiry. Completely wrong, as all these statistics demonstrate.
Interesting. Do you know how I use it? When I have trades now, I think about, well, does my thesis hold for 21 days to expiry of this thesis, and where will I be in the risk, reward space? And then I decide then to either take it off then, or whether it becomes an ultra short trade. So that's how I'm using it to manage risk at the moment. But it is interesting to note, because you don't want to be in periods when you have a less likely outcome of doing well on your position.
Yeah, definitely.
So key takeaways: managing trades involves closing winners at a profit target or specific DTE, days to expiry, minimizing losses on losing trades, and rolling positions to different strike prices. This is what I like about it too, Rich, that you have a real marker as to when you should think, should I roll, should I stay?
The best loser wins.
Or expiration cycles to adjust risk. Early managed contracts generally behave much more predictably and consistently with changes in IVR. For those of you that have just joined, but that's implied volatility rank, and are best suited in high IVR environments. Managing at 21 days to expiry seems to provide the best results in most, but not all situations, which is why it is the most often used management technique. Which brings me to this very subtle point. Have you decided what to do with your HSBC when I hollered, "It's turning, Rich"?
So it is now 727. 727, it's bounced. I heard Terence in our ears say, or actually, was it Phil? Phil, look at HSBC, it's 725, now 727. So,
So you're going to manage your position.
It's 5%'s a lot though, isn't it? Ooh, it's a tricky one. Shall we go to break, and then I'll have a bit of time to decide on that one? Join us afterwards for what's coming up next later this week.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our training platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into three key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Welcome back, and this is one of the best bits of the show. We tell you what's next and what we've been trading as well. How is HSBC, Rich?
It's oh, look at that. It's just, what did you do to it? It was trading all happy at 7.27 when we went into break, and you've just knocked it down.
I didn't knock it down.
It?
I That's right, but this ties me in as you're tidying up your trade, back in nicely to if you miss the first leg and the second leg up of this trade, now you can trade the third leg, which is sometimes what I like doing. So I'm going to do a sell. I'm going to do 3 pounds a point, and I'm going to put a level there once I place the deal. There you go. And what I like to see is that this will hopefully, if I'm right, because it's got momentum there, cross that handy yellow line, which is where it broke through and got me to the 725 level, which is where I took profit. So now I want to see it crossing that yellow line, and then I will look to take profit at around 718.
Now, what do we have to look forward to today? Well, pre-market in the US, reminder, we've got all sessions. We've got Pfizer, and we've got the Big Mac, the Quarter Pounder and cheese, the Mac Royale.
Do you like McDonald's? I get a sense that you know a lot about McDonald's menu.
It's my treat once a month. I love the fries from McDonald's. I have a plain burger with ketchup. That's it.
Don't you find McDonald's like a bad date though? It's like really good in the first half hour, and then it's shit from then on.
What, as in afterwards?
Yeah. It's like, it's like the first half I was like, yes, it's the most amazing thing. And then after that you get this.
So, but is that like the trading the stock as well? Is it, are you going to trade, great trade for the first half hour on McDonald's earnings? Because a reminder that, where is it trading now actually?
McDonald's is...
The guys have stolen my screen from me.
There we are.
I can't see what's going on now.
McDonald's. Here we are. Let me get you onto the daily chart. There we are. Daily chart for you.
290.
Now, McDonald's is currently at 297.
So of course still the fallout from that E. coli breakout. So we'll I would imagine there'll be a lot of commentary on that from management today, trying to get the confidence back in to the.
Did I read somewhere that they blame the E. coli on like
the onion?
Yes, yeah. The onion.
Yeah, it was the onions.
Was it actually the onion?
Well, I mean, that's what they're saying. It's very hard to prove, and even themselves, they couldn't absolutely categorically say that it was the onion. That it could still be the meat, which is, but that's why you get burgers, no onions, no cheese. It's annoying when I have to order a cheeseburger and say take off the cheese. That's just a waste of money.
Wait, why are you getting a cheeseburger then?
In some countries they don't offer the hamburger, so it's because you get the double cheeseburger. They don't do a double hamburger.
Oh right.
Australia do. You walk out after that 24-hour flight into Sydney, and you walk out of departures and there's a McDonald's right there, and it's first thing in the morning. What could you want more than even a McDonald's coffee, a double burger?
Did you say McDonald's coffee?
McDonald's coffee, a double burger, large fries. Oh.
If I push come to shove, if McDonald's was the last thing on earth, then it would have to be the McBreakfast. You know, the hash browns, but not really the breakfast itself. The shares currently taking a look on the chart, because this is all sessions on the IG platform. And you can trade it obviously a bit later on in the day on the options front as well.
It's usually 11, is it 11 o'clock or 12 o'clock? Oh, because it changes
now. The times we've fallen back.
Yeah.
Yeah.
So is it 10 a.m. or 11 a.m. It'll be
earlier. Probably a bit earlier. But what's important and key here to look at is the price action, because we are already seeing that if I show you my 5-minute chart, it did rise a bit, but now it's plateauing, and I don't like seeing this sort of pattern, because to me it's still...
That's just waiting for numbers though.
Yeah, it is waiting for numbers, but what I'm trying to get a sense of is how many. I've got my volume up as well to see how many people are getting ready, right? But what's also key to watch out for before the open, we got PayPal as well. Elon Musk's former love, Pfizer, and also Royal Caribbean Group. Crocs, I think it was Dan or someone that goes jogging in it. Who is it? On the chat room that said,
Really?
yeah, I let all my dignity leak out of the holes of the Crocs, but I do jog in them. Shame on you. You're going to hurt
no
yourself.
Achilles
Don't do it.
problems coming there. And then, of
Strong
course,
ankles.
Google tonight, aftermarket, the big alphabet dog. We get the start of tech trading season. Just after, I think it's about 8:15, those will come out tonight. So we've got Google. Then tomorrow,
Tomorrow we've got
Any big
Lilly
UK?
before the open, Caterpillar. Do like that stock.
what about in the UK? Glaxo. GlaxoSmithKline tomorrow. We've got Next. Remember trading with Next. Remember trading with Pega has her position. Pega has her position in Next.
See, I don't get Next because I got them when they were the first out with their catalogs, right?
Yep. Yeah, those were well ahead of their time, weren't they?
Yeah, I mean, even before websites, and everyone had a Next catalog somewhere.
Directory.
Yeah, or propping up something. But it were ahead of their time. But I just understand, like, their website, or that's why I don't trade the stock.
Short them.
Yeah, but I just like, nothing screams sexy to me. So we also got obviously-
Volkswagen tomorrow morning. So Volkswagen, Airbus, BASF, and yeah, those will be interesting because Volkswagen going against their trade unions there, trying to close 3 factories in Germany. Remember, State of Lower Saxony holds about an 18% holding in the company. So that is going to be an interesting conversation.
I feel like Astra comes out this week too. Does it?
And not on the diary. Let's see, that could be an additional one.
And of course,
Aston Martin comes out.
oh, that stock that keeps continually. I'm trying to find a pun, but my brain's not engaged yet.
Going into reverse. So Glencore Q3 production out tomorrow morning as well, and the Standard Charter that is also benefiting from the mighty HSBC this morning.
Yes, which brings me to that trade. So those of you looking at HSBC, not sure if you short as much as I do, but what happens, and I'm going to try and draw it out for you. I'm sure producer Fred is going to say you're drawing, Argeline. But if you miss the second leg up, then there is another second. You can also, I am trading the bounce. This more than I can sometimes because there's more clarity and all the a lot of the mad volume at the beginning has come out of the market. So I am looking for that to reach around that price level that I have put in place, 722. If it breaks past that, then my next stop or my next point that I'll be looking out for is 718, as Rich is next to me tidying up his stops and limits. What else is there? I'm looking to trade a lot of the big tech names this week. So midweek we get the Microsofts, the Meta, also we've got Uber. And what I like about Uber is I'm also calling up my cousins in California to find out how well the rollout of Uber Gold. Have you heard of Uber Gold?
Don't think so. Does that mean they actually come when you call?
It means that when you book for Mama McDonald and you book via Uber Gold, you can actually, for a premium, put on everything from additional comfort additional ramp access. You can even pay premium for someone to escort, for the driver to park and escort Mama McDonald into the theatre for you. Yes, so that is a premium service that they're trialing out. There's also...
It doesn't sound like there's much upside for 95% of the users, though.
There's a huge... Well, the upside for the users is that, you know, if you're stuck and you can't go and pick Mama McDonald up, you can send an Uber Gold, right? For quite high premium. And also the things, don't forget, most Western countries have a fast aging population, where the pyramid's not that this way, guys, it's that way. We also have Western world has a lot of the wealth stuck in that side of the inverted pyramid. So there is money to be had. Plus, it ties in with Uber Meds. Have you heard of Uber Meds?
Uber Meds?
Yeah.
Oh, they bring you pharmacy. Now, that's a good one, because when I'm ill, I want things to be delivered to me.
Yes.
So that makes more sense.
Exactly. Is that urine or is that Lemsit?
That's Lemsit, but let's hope. Right, let's go back to UK movers and the big European movers today. So Pearson up 3.2% now. Antofagasta up 3%. Are we getting a move on copper? That's interesting. Look like the miners are taking a bid here. Anglo-American also up 1.4. And then in Europe, we've got Philips recovering from that horrific day yesterday, bouncing back 3%. Ubisoft up 3 ahead of numbers tomorrow. And Adidas up 1.6, and you'll be happy to hear. On the losers, Lufthansa still down. Oh, Lufthansa actually much worse than before now. Down 2.5%. And we've got Burberry losing ground, down 2.7. BP now down 2 on the day. That opened unchanged, I think, didn't it? Maybe slightly down. And yeah, quite a few losers there.
Taking you across the commodity space as well, oil having a bit of a lift after quite a few down sessions. Natural gas is down though. We've got gold up 0.33%, but still around that 2751 handle. Palladium is up. I have a trade on palladium and it's a bullish trade. Platinum as well is up. And I have also got a bullish position on platinum because one is related to the other. If there's a shortage of palladium, then people turn to platinum. So that also gives platinum support. Copper up 1%. That's high-grade copper. Copper itself is also up 0.8%.
So loser of the day is Ford. In that all sessions, now down 6%, around that 1070 level. After numbers last night showed no improvement there. American Airlines down 70 basis points. Nvidia dipping back below the 140 level. So that will be an interesting one. Will that move on tonight's AMD earnings? So AMD after the market tonight as well. It's tough because what AMD does doesn't necessarily read through to Nvidia, because if it's bad, it just means bad. It just means that Nvidia's continuing to there, doesn't it?
Well, what Nvidia does is it tends to have, if they've got positive news, it tends to kind of cheer the sector. So watch out for those of you that trade, you know, the related stocks in Asia. There's your opportunity. It tends to cheer the markets, even for like the bigger indices that many IG clients like trading. And also AMD, of course, giving us a big sort of look ahead to what is going to be a monster tech week.
Right, so let's do a quick roundup then. What trades have we talked about today? We've talked about the potential for a move in cable on the back of the budget tomorrow. Elliot Harris tells us that vol is looking interesting on the low side. So I have bought a weekly 130.5 call for cable, and I paid 22 for that. That's expiry Friday, and it takes in the move on the budget tomorrow. I quite like that one. And then we are watching HSBC as well. So now trading 724. I'm going to hold it with the thought, do we get an upgrade in that in that stock tomorrow that sends it up a further 1% towards 730. BP, meh, I'm holding that one. That's not doing well at all. Down 2% on the back of numbers, and that is costing me about 400, I think. Yeah, 460. So painful on that one. But I'm short oil for £4 a point or $4 a point.
What level are you aiming for oil?
So, well, this is the longer term one. This is, I think that this could now really fall foul of the oversupply in the oil market. And, you know, I'm going to 62 bucks.
Interesting.
Yeah, but yeah, short that put alongside it, short the $53.50 put.
I've got a shorter term sell on HSBC, and I have put these 2 yellow lines there because I'm looking to see what happens at the 725 mark. If it bounces above, then I will close out. But if it bounces back down, then I know that there is you know, some pressure there. But this is a short-term position, not longer term like the one that Rich has got on. Palladium is one that I put on yesterday. It is now in the money. This one is more longer term, and I'm thinking Palladium can potentially get back to the levels if it breaks past the let me show you the daily chart. That might be better. If it breaks past the highs seen around September last year, if it breaks past that, then I think we could potentially then get back to the high before that, which is around 1300. So
Ooh,
I think Palladium.
I'd like that.
Yeah, no, me too, because you're long as well, aren't you?
Yeah, big position in the pension.
I did a bit of digging into the history books yesterday, because I think, you know, with trading, it doesn't repeat itself, but boy, it tends to rhyme, just to get a sense of whether or not...
We're getting told to wrap, and I think Anne's just wants to stay, because she knows she's got something admin-wise to go and do. So she doesn't want to go and do it.
I'll wrap this up really quickly, but look up Russia and look up what the Allies did, including the United Kingdom, with these sort of metals when it first invaded Ukraine. There you go.
Have a great day, everybody. Enjoy your Google, enjoy your Visa. I'm off for a McDonald's. We'll see you tomorrow.
Israel, Iran, that chapter's closed. Markets enjoy it, and then they fizzle. What does it mean? It's earnings week, of course, but this is overtime. It's Monday, October 28th, 2024. I'm your host, Chris Vecchio, here in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, to take you through the rest of this hour, at least, as we work our way towards the futures market close. The session started off with a bang. Equity markets opened up higher here in the futures market, bonds lower, oil cratering, as we see that Israel's response coming Friday evening, right after markets close, so he can't trade it. Does really little to no damage of civilian or energy infrastructure. And we see that oil gaps open lower and stays there all day today, largely defining that market action. But that was really it, guys. You look across the board and the little economic data that came out, the auctions that we saw with the 2s and the 5s, they reinforced the idea that maybe yields are still pointed to the upside. Overall, when we look at the market settle in by the close, the NASDAQ is barely higher by 0.06%, the S&P higher by 0.3%. The Russell does eke out an impressive 1.62% gain, though. And the crypto, that's on fire. BTC at 4.47 and ETH up 1.48. Let's just start here. Ilya, this is a big earnings week. 42% of the companies in the S&P 500 are reporting. It feels like with that ahead, and so many of those significant Mag 7 names do here, which had relatively quite volume if you look into the like Mags or the individual stocks or even their options today in the trading session. This is less than 1 million contracts traded on ES. It feels like today was a day where people saw the market open, said, okay, this is an opportunity maybe to recenter my strikes, get some positioning recentered, fixed, and you know what? I'm going to watch paint dry for the foreseeable future because the earnings still haven't come out and we still haven't had the election. So much ado, ultimately about nothing.
I mean, is it really any surprise that the markets are not willing to commit to a direction when we have, as you just mentioned, huge earnings releases this week, a macro calendar that is absolutely bursting at the seams, and then the election? If nothing else, I would expect that the macro calendar this week should have much more influence. I'm a little bit questioning of how much uplift the earnings can have, or frankly, how much of a downdraft they can have after last week's explosive Tesla numbers did absolutely nothing. In fact, the NASDAQ seesaw on that was very, very telling of a market that just didn't want to have conviction around that kind of a thing. This week, we're going to have a ton of other opportunities for there to be conviction. But also, the macro calendar is bananas. Every single day there is something huge this week, and then also something second tier, and then usually something third, fourth, and fifth tier. It's unbelievable. There's U.S. inflation, U.S. growth, U.S. employment, inflation and growth out of Europe, PMIs out of China, inflation out of Australia, a Bank of Japan rate decision, a Swiss National Bank rate decision. What's your pleasure? Everything is on the table this week, and then next Tuesday is the election.
But isn't the only issue that exists inflation or no inflation? Either the economy is strong, there is no landing, and we go forward, or the economy is strong, there is no landing, but inflation is back. Like, to me, it feels like those are the only two sort of theoretical outcomes of the economic data over the next, between now and the end of the year.
There's one key difference.
Either no landing or no landing with inflation is back. Sorry.
Right. Well, so this, I think, is really the key. Whether no landing is good or bad might be different here versus the beginning of the year. The temptation in seeing everything that we're seeing, because the markets are clearly repositioning for the U.S. economy, is heating up.
For the no landing vibes.
Or at the very least for the why in the world were we concerned about recession? That makes no sense. We need to reposition vibes. Because clearly yields are marching higher, inflation expectations are up, the dollar is up, all of that. The bonds are getting soaked,
shellacked.
all across the board. Pick a tanner.
It's an
So
abomination.
everywhere. It's a reflation situation everywhere. The difference between this and what we saw at the beginning of the year, because at the beginning of the year, stocks looked at a similar scenario and said, what in the world is there to be concerned about here? This is more
Meaning the
growth.
no landing vibes.
Right. This is more growth. Okay. So have fewer rate cuts, whatever. Sure. The difference at the beginning of the year and now is that at the beginning of the year, the rest of the world was growing. Europe was coming out of recession. China was accelerating a bit. That's different than what we see now. The global economy is actually slowing. The US is outperforming by an increasing quotient, if you will. Name a number. Is it inflation? Is it unemployment? Is it stock market performance? It doesn't matter. Name a variable. The US has pulled away. But in the US, the spending is staying at home. It's not spilling over. Even Canada is in dire straits. And if anybody should be benefiting from a strong US, it's Canada. Not happening. They just cut by 50 basis points last week. So it's not spreading. And the global economy is weak. And China is weak. And Europe is weak. And in this environment, higher borrowing costs on dollars, that is a less dovish Fed, is very scary news, different in that sense than what we saw in the first quarter, second quarter. How this resolves now will be interesting. This week is a big test because the US data will ostensibly be strong again, and Eurozone data will ostensibly be soggy again, and the data out of Australia and China doesn't look great again. So the divergence continues and the vulnerability builds. That's the difference.
Well, the currency markets aren't really showcasing anything nice today. I think the most interesting move coming out of Japan largely centered around their political dysfunction, which is nice that someone else is going through it besides us. 0065, 66.5 right now. It's a 0.67% loss, and some of the lowest levels that we've seen since the middle of July here in the yen. The ruling LDP party loses its majority, and that's effectively a monopoly over in Japan in terms of politics.
Yeah.
So it does represent a bit of a shakeup and keeps us in a place where if U.S. yields are running higher, then the dollar's pretty well supported. It speaks volumes that on a day where oil is off by 5.36%, a currency like the yen can't stage anything more of a bounce than actually getting dragged underwater. But Dylan, I think the hats go off to you for riding this out. Despite the uncertainty, the haters, the naysayers, you stood in there and you said, no, Iran, I know you're a bunch of cowards. And I know that nothing is going to come of this. And Israel, I know that you're just doing window dressing and nothing is going to come of this. So I dare you to make me lose money on these long oil puts. So, sir,
Did I say those things? I don't have a direct recollection.
I don't know. In my head, you were like,
nice, though.
You were like, Ayatollah, come get this. Hey, Vafangul.
Hey, Vafanopoli. I don't. So maybe I don't know. I slipped out of my mind. I just remember thinking,
you were bearish oil for better.
Praise the Lord, sweet Jesus. I hope this works out. I guess I'll hang on.
Oh, okay.
But I'm happy with your story. I like the way it sounds, so it's okay with me.
Yeah, like you were riding this lion and you were climbing this mountain in my memory. Yeah, and you're like, you're like, hey, give me the oil puts. Okay, so
give me more. I need more risk. The hell with Iran. The hell with the Ayatollah and the Jews. All of them. None of them. Nobody means it. I don't remember that, but
I think that was Ilya who said that last part, just to avoid cancellation.
I mean, in fairness, I too have been short oil, so we've been on the same side of this idea.
I'm just saying, I was more like, oh, I hope this doesn't end in tears. I was like, I guess I'll wait a little longer, and so I hope. But anyway, I like your version, which is, I find it,
I like this version better. This is a good version.
It's great. It's great. Put it in the book.
Well, we saw that they go off on Friday night. I was doing my part here for the folks on overtime to try to figure out whether or not this was actually legitimate, which is why I shared this on Futures Power Hour earlier. I took to just messaging the Ayatollah on Twitter myself on Friday evening. He didn't respond to me. Do you plan on responding
But he
to
could
Israel?
have.
He could have, yeah, he could have. He chose not to, which I found offensive.
That's the beautiful thing about Twitter is that it could have happened.
It flattens the world. Yeah, for
Like
sure.
if you sent him an SMS, he probably would not have received it. Technically, he saw your tweet or could have seen your tweet and could have responded.
Yeah, and like someone on his team was forced to read that and go, do we escalate this to the boss? And apparently the answer is no. So I got some things to work on in terms of brandishing my reputation. But we do have an oil decline, which is the whole point of this. 5.32% lower here. So we're at 67.96. It's quickly returning to a world pre-October 1st, or at least the morning of, when we were down there at $65.99. And I think that's the important benchmark for people to realize, particularly for those who have, with some success in recent weeks, operated on the long delta side of the equation, which I have not been in for the past few days. We saw the headlines several days ago, right, when we were here on overtime last week, or really the week prior, and we're getting the announcements that they've identified the targets, but they're not going to be any energy infrastructure. Getting towards the expiration date, there was a reason to get out of the short put spread, and sure enough, that happened on Thursday. We didn't enjoy Friday's rally. At this point in time, I guess the question is, volatility is coming in, the market's going down. Is it still worth looking on the short oil side here after today's move? So before we break down what...
No, sir.
Okay, why do you feel that way?
Because there's look at the again. What is the issue? The issue is perceived asymmetrical geopolitical risk due to World War III.
Mm-hmm.
Perceived asymmetrical risk due to World War III has been once again, for the moment, taken off the table. The beautiful thing about this is it will be brought back. The whole World War III risk concept has become like a routine event really since February of 2022, and even more so since October of 2023, because you got multiple theaters of World War III optionality. But I still think the bet against World War III is your best bet in town. So anytime you get sort of elevated perceived World War III risk, which right now tends to be originated out of Israel more than Russia, you can sell it. But anytime that you get a massive contraction, both in this case in both IV and price, you have to wait for the next sort of, because you're going to get it, right? You're going to have the one thing that people have to understand, not that they don't understand this, but I'll reiterate it, is 8 days from today, the United States will have chosen a new president, full stop, 100% chance. The president of the United States will not be Joe Biden in 8 days. The chosen president, right? The
president-elect.
President to be, yeah, president-elect. Thank you. That creates all sorts of opportunity for perceived World War III risk. Kamala Harris is going to prove she's tough because she's a woman, so she needs to start World War III to prove that women are tough. Donald Trump's going to start World War III because he's a full fruitcake loon job, whack job. He loves war. Like the opportunity, and whether it's because a woman president needs to prove she's tough, or whether it's because a New York fruitcake needs to prove he's tough, both are an opportunity to short oil. But why would you do it now when you're basically approaching the bottom of the range? I'm happy to own my short oil position, which I do, but I'd be looking to get out of it. I wouldn't. I guess my short answer, Chris, is I wouldn't originate a new position now. I'll wait for the next scare, which is basically a guarantee with the new president, because no matter who wins, whether it's Harris or Trump, they're going to do something nuts, and they're going to say something crazy. They're going to do something tough, whatever. I'm the new sheriff, whatever they're going to say. It's going to spark things off. It'll be a chance to sell it. Or it'll be Netanyahu doesn't respect them. Netanyahu won't listen to them. Putin won't listen to them. Putin doesn't care. Putin doesn't respect women. Putin doesn't respect Trump. Netanyahu doesn't respect either of them. Whatever the gibberish is, it'll bid oil up and you can sell it.
Ilya, I think you might be a little bit more bearish on Dylan, only insofar as, aside from the technicals
On
here,
Dylan or on oil? Excuse me, sir.
I'm
strongly bullish on Dylan, strongly bearish on oil.
Thank you. Thanks.
So we have the move higher to 78 in oil, right? And like as a bear, you and I have talked about this. We've talked about it here on air offers that this is just a gift. Like, look where oil was on October 1st prior to all this happening. And do we really think it's going to pop off in the manner that so many people are fearing about? No. There is a case to be made that Iran's a paper tiger, and we can go into that in a second, why I really actually think these geopolitics may be dead for a little while after what we learned this weekend. But is 65, 66 the floor now? Are we thinking about the September 10th low? Should people who are looking to get long exercise a bit more patience than trying to bottom fish today?
I don't think there's any reason to bottom fish today. Let's start there. What we clearly have here is in the most kind of forget everything else. Just look at the price action, forget the chitter chatter. You have a break of the prior swing low. You had a big gap down through that sort of oscillation axis around 72, where it's been rotating up and down basically since June. You gapped through it, you came back, retested that, held there very clearly and pointedly, and now you've been rejected down and you've made a new low. There's no reason in the world to be a buyer of this. Not here. To Dylan's point, we're approaching the prior swing low from, let's call it early October, 66 and change. Is this good risk reward to initiate a new short? I don't think so. I wouldn't. I have my shorts. They've been on since 72 fell away again. And obviously I've been a seller of this all year. Just whenever it seems to pop and then give evidence that the pop has rolled over, I've sold. That was my system here. That's what continues. Would I enter short here now? I don't think the risk reward is great, and the proximity of the recent lows are why. So if you bounced here and let's say came in to retest 69, maybe that would give an interesting selling opportunity or a more interesting selling opportunity. But at this point, I don't see the rush. I would look and wait. There's a really big support area that's coming up around obviously the September lows. That's around, let's call it upper 65s. And then underneath that is the big support going all the way back to March of 2023 in the kind of 63 and a half, 64 and a half area. That's a huge area. So if these things fall away, oil has no bottom. There's just, we're going back to like 40, 30. But
not quite the COVID lows, but
yeah. Well, I mean, the COVID lows ostensibly were zero, which is really funny when those contracts inverted in COVID, and the futures market basically went haywire. Obviously, physical crude oil didn't actually cost zero.
That was my first week back at work after paternity leave. I went on paternity leave in January. It's like, oh yeah, office is open. We'll see you when you come back.
Yeah.
And then like I come back to work after several weeks off, and it's April now. Like, by the way, there's no more office, and oil's negative. It's like, oh what?
Yeah. Yeah.
Okay.
Welcome back.
Yeah. All right. Cool. Yeah, no, oil here, though, the technicals are just horrific now. If you want to take a very charitable view and draw the trend line off of the April 2020 lows and any of the recent swing lows that you have in recent weeks and months, you're going to find that there's multiple points of failure, of trend failure, where every time we try to, we break down and try to climb back through, you get instances like this where we do poke above and only to be met with new selling pressure. So charitably, if we want to look at recent swing lows, guess what? We're failing above all of them, and we're not really making any progress to put in a significant bottom. So there's a broader point here, right? A few weeks ago, the substantiation for looking at short put spreads was not just the elevated volatility environment, but also the structure of the positioning in the futures market. which is not quite as thin as it was a few weeks ago, which makes it unappealing. But moreover, the data reporting series for the week that contains this action today is not reflected in the data that is contained on Friday, in part because those cycles end every Tuesday. Lucky for us, that means when the week ends tomorrow at 5 p.m. Eastern, we'll see that positioning update in oil to see how this geopolitical flush actually forced money to change hands. And so that's going to be 3:30 p.m. Eastern this Friday. Now, if at that point in time we see that positioning has flattened out and we're back into the, negative 1.35 Z-score range for crude oil positioning in terms of where it's been relatively speaking over the past decade, then I can get on board with it right now. But because we're not in that territory and we've yet to see what today's data does or today's price action does for the positioning flush, I prefer just to be patient here. And then the volatility itself. We have to remind ourselves here that in normal markets, crude oil prices going down are typically associated with a decline in volatility. If it's not recession, if it's not war, then energy perks up on higher vol, supply issues, what have you, and then comes down as maybe there's too much supply, and therefore we don't need to worry about prices. It's a 50.9 IVR. Selling call spreads here still viable, particularly above, let's say, Friday's high. The trades may not have a ton of juice in them, but if we were to look at something like a short call vertical and going out, that's too far. Let's go out. Let's try to just say, well, we're going to take advantage of this as short as possible here. 11 days. 11 days right now above recent swing highs, 85% probability of profit. If you're looking at the 73, 74, you're risking 9 to make 1. So perhaps trading MCL short is the way to do this if you want to trade it like a momentum trade, but there has to be room for some downside flush if you want to operate on the long basis right now. There's no reason to try to catch a falling knife when the dust still really does need to settle out here.
Yeah, I mean, you look at this and you go, why here now? You have a ton of U.S. event risk and a ton of sort of energy relevant market moving potential that's tied into this election, rightly or wrongly, by the way. There's a lot that seems to be baked into the quote unquote Trump trade or Harris trade that doesn't necessarily line up to policy. There's no reason why, for example, the Trump trade should be necessarily lower oil because we're going to produce
I
much
feel like
more.
a new U.S. president, whether it's Harris or Trump, will in the short term increase the price of oil. I think it will.
It's very possible.
No matter who wins this presidential election, it's someone who is not the current regime, which increases uncertainty, increases volatility, increases unexpected outcomes in the Middle East, in Russia, everywhere. Harris is more unreliable, so I think that if anything, I would, I'm not going to talk myself into a long oil position here, but I just think short term, and meaning between the next 2 weeks, we will have an outcome that the new American regime inherently increases uncertainty. Full stop. In Russia, and in also Israel, everywhere.
And also, you start to get some interesting stuff because Biden then has a lame duck period with lots of really interesting live wires and no further consequence to aviators on policymaking.
To go, Mr. Big Guy.
Yeah.
So let's say Biden, Mr. Big Guy. What's he going to do? Is he going to say, "I'm not backing Israel"? For sure, he's not going to say that.
No, I think he might go the other way around, depending on what happens.
Is he going to say, "Well, I'm going to roll Iran"?
Theaters.
He's not going to roll. Wait, so let's say he gets bigger. He's like, okay, let's roll Iran and let's roll Russia. I mean, what's he going to do? Really?
I mean, he could push for a really grand bargain, at least in the Middle Eastern theater. Now that
you're trying to make a big Israeli deal, you're saying a big deal on the way out.
Yeah. It's a big. I mean, we've already kind of seen. We've seen Netanyahu's kind of come out there and go, now that Sinwar is gone, it's a different phase. Blah 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 blah. And the Iran thing with the arrival of that THAAD battery is more so in a box because now there's 100 U.S. service members in between them, and nobody wants for any of them to get hurt because then everybody is in a corner. So maybe there's room here after the election for Biden to go, all right, let's get a big cool down and have a loud Gaza ceasefire deal.
And have the
That's
Biden peace deal on the way out for Christmas.
Yeah, I mean, that would be a real feather in his cap.
Which means oil goes into
I
the
think that
60s.
is so unlike. I think that's just so unlikely.
It's very unlikely.
Vec,
It's very unlikely.
Vec, you can't even take it. He can't even take it. He can't even.
The guy,
tolerate the
what do you do?
discussion.
What are you talking about?
He can't.
This hopium is intolerable.
This is the guy with
Can't
the
handle.
orb. You think that these guys that are touching the orb with Trump are going to be helping Biden make a deal? No, like they're part of the reason
Oil's
why.
going to be into the 50s. The oils are going to be into the 50s on a Biden super deal.
If you're looking at the market right now and you look at poly market or you look at treasuries or you look at DJT itself and you see these things moving in a direction consistent with the Trump victory, why on earth, as a Middle Eastern leader who's seen the region go aflame, this is a person that you cut the Abraham Accords with a few years ago.
No, but what Ilya is saying is assuming, he's not assuming this, but there's a chance of a Harris victory.
Yeah, that's right.
Which gives you then a Biden lame duck, which if in the theoretical of a Harris president elect and a Biden lame duck, then you set up Biden for the Biden super deal, which sends oil to 54.
Yeah, could be. It could be.
That is such a Veep scenario where, like, in one of the
that kind of a year.
In one of the seasons of Veep, Julie Louis-Dreyfus hammers out a peace deal between China and Tibet. Okay, but because both leaders of both countries don't know how the Senate and Congress are going to ultimately vote in the presidential straw poll because it's a tied electoral college, they don't announce the deal until I think her name is Mendez ultimately becomes the president. And immediately on day one of her presidency, both leaders of China and Taiwan give credit to Julie Louis-Dreyfus's rival, and she wins the Nobel Peace Prize right away. I could totally see a scenario in which Kamala wins and Biden comes out and hammers out a peace deal just almost out of pure spite to deprive her of the oxygen of a victory early on in her term. And so she's going to have peace in the Middle East for her first term in office, and she'll have nothing to do with it.
And then she'll F
cruel
it up.
and comical.
As it unravels, it'll become her fault.
But the market, I want to get away from like the speculation around all that. What I care about is the market still selling the very.
Listen, you said to me, are you long oil or are you short oil? This is the question.
Yes.
The market for poly market is telling us 65.8% here today. Chance Trump going to be the next winner. A 2 and 3 shot, consistent with about like a negative 185 line. If you're looking at the betting market, if it was a sports game, if you're looking at the Jets, I think, the Jets have better odds of turning around their season than Kamala does upsetting the betting markets here. Oh gosh, that is a real number crunch for me, guys. Holy cow, the Jets are bad.
I disagree with poly market. I think Kamala wins.
Yeah, in fairness, I think poly market's
and
wrong.
Michigan.
I wanted to bring up
Poly market's
here
wrong
about this,
on Nevada. They're wrong on Michigan, and they're wrong on Pennsylvania. This goes the other way. More likely.
So this is,
I don't know. Poly market is being manipulated by Elon Musk. Okay, there's no betting size limits. It's an offshore crypto market. This is not a real data set. It's used to. It's a psyop.
In fairness, Kalshi has similar percentages and it's onshore US, but nevertheless, these are very illiquid and I don't think they represent what's actually going to happen. I think right now, my base case scenario continues to be that what Donald Trump had to do in this election was convince people that were not already for him to be for him. I don't think that's changed because he's the same candidate. And so just in terms of him having a lower ceiling to clear, in terms of him being essentially more capped, I think we're going to see an upset of the polls of this. Just
Pennsylvania is Harris, Michigan
just on the grounds
Harris.
that people are not going to flip their vote significantly. There's not going to be a flood of Biden voters that flip their vote the other way. they made this decision.
Okay, so are we suggesting that the move in this little mini Trump basket that we track here, which is up 3.33% today, easily outpacing the Russell, which is only up 1.54, paltry little Russell. We see here that we're basically looking at the basket's highs nearly year to date. Now, there could be some tail wagging the dog here. Poly market's moving up, and people are saying, well, why would I want to buy Trump at 65 cents on Poly market when I can buy it at 60 in Kalshi? So there may be some attempt at arbitraging, although given the structures of predicted and yada, yada, it's very difficult, as we cover on the prediction trade on Thursday. So please join us there.
Yeah.
But you do see here in the Trump basket, it's extending quite strongly here in the session. We had a Trump rally in New York City this weekend. It was quite colorful. The news coverage speaks for itself. I don't really need to go in there, nor does anyone else. There's not a trade to talk about within that particular context. But there's 8 days left, Dylan. What's the trade that presents the best value going into the election, right? Because buying the Trump basket at 342 is different than buying it at 435. The market's priced this in. Is the high convexity trade out here right now to position something that's short-term high convexity out of the money that would favor or come down in the event of a Harris win?
Yes. The short answer is yes.
So let me just rephrase that as well. Is it worth spending 65 cents to pay for $1, or is it worth the 35 cents speculating that the political betting markets are wrong, and instead going with what the polls show, which is legitimately, it is a coin flip. Depending upon the weather and turnout, that will be all the difference when it comes to next Tuesday.
Yes. Once again, yes. How you could not be, the betting markets are honestly, I think the betting markets will come up in the next week. I believe the betting markets will correct.
And end up at 50-50 where the polls are. Yeah.
So what's the trade?
That's a very plausible scenario
what's
for
the
me.
Trade, if you're going to talk about the betting markets, the trade is to buy Harris and or short Trump, or again,
forget the betting markets,
or sell a call spread. I don't know I say this without knowing the liquidity in DJT, but a DJT call spread is mighty attractive.
Options markets are really difficult here. And I think Tom and Tony were talking about this today, where the market is situated such that you basically can get a 4-to-1 payout no matter what directional bet you take here at equidistant deltas, which I found to be fascinating. I have to look into that more. But the point is, we just have this big weekend in politics. We have all the polls come out. New York Times, Siena, it's a dead heat. ABC, it's a dead heat. And we're within the margin of error. So which way is it going to go? Well, according to many political pollsters out there, people that we've talked to on the prediction trade, and just from studies, travails of everyday life, I've learned that one of the things that Democrats need to see from Harris's perspective is at least a 2.5% lead in the national polls to have a chance at winning the Electoral College. That is not where she is right now. And so the market is in a state where it is probabilistically determined that Trump is going to be the next president of the United States. Could more of that be priced in the night of the election? Yes, absolutely. So if your core positions have been predicated around Trump winning, short treasuries, long stocks, reflation back on higher structural inflation, so things like long home builders and long materials, it's been working out for you. Why do you have to change anything? But what if we're all wrong? What if the financial markets, which I know are super efficient, but I know that they could be wrong. We need to get into that because this is the year of the bond trade. And I want people to think about this outside the box a little bit. This is not about political allegiance. This is not about who you're voting for. I literally don't care who you're voting for. That's not my job here. It's none of my business. That's between you and the voting booth. Okay. But if we're thinking about the market having skated to where this puck already is, how much juice is left to squeeze here? Is it worth thinking about this race as 50-50 and thus saying, well, if the market's gone to 65% of the length to price in a Trump win, where can we get value if he doesn't? What would be that trade? Would it be bonds, which when we see Trump's odds peak, hit their low point in mid-September, that's when the bonds peak. Bonds begin to peak actually before the Federal Reserve meeting. And they are weaker than what the SR3 contract would imply. Down here, we're looking at some of the lowest levels since the end of June, beginning of July. When you head over to, say, the SR3Z5, we're talking about the lowest levels since the end of July. That doesn't seem like a big difference, but here in the SR3 contract, that would effectively mean discounting another 50 basis points worth of rate cuts off the table through the end of next year. So clearly something else is in it. Is the play long bonds? Is the play long tech? Is the play short DJT? That's the question we should be asking ourselves this week. Where we can get value on the board, where if we drop a few quarters into the slot machine, we have a chance for a big jackpot come November 8th, November 9th, November 10th. It doesn't need to be part of our core positioning that's carried to where we are over the past several weeks during the reflation trade. So Ilya, I want to bring this trade specific. If it's a currency,
Sure.
if it's a stock ticker, if it's a commodity, if Trump wins, given the pricing in the market, what do you want to be long on election night? If Harris is going to win, what do you want to be long on election night?
I think if Trump is going to win, then being short the bonds for a further reflation melt seems like a decent setup. Being short things that are growth sensitive, like the Australian dollar and the Canadian dollar against USD, that seems to make sense. All of that being a reflation thing. And I think seriously rethinking just how far gold can go higher. I realize it's at the highs, but that gets interesting. I would probably rather take the trade in the bonds and in the dollar than in gold because it is at the highs, and it hasn't confirmed. On the flip side, though, gold, I think, becomes one of the most attractive setups if Harris wins. On the downside, I think gold is vulnerable here across vectors if Harris wins, because on the one hand, you get less erratic and unpredictable. You get more continuity relative to where policy is now. So maybe some geopolitical shenanigans risk comes out of gold. The position on China or Russia doesn't really change, but perhaps a commitment to the US dollar Federal Reserve status quo versus uncertainty around that helps, and that undermines the appeal of gold as a fiat alternative. And of course, yields are up because the US economy is strong. The dollar is up with yields. Gold has diverged from them here. It shouldn't be up like this when the dollar is strong and yields are up, because it is a foil to fiat currency and because it yields nothing. That gold is up here doing this seems like a Trump trade kind of a thing. And if Harris wins, this might be the place where there's the best risk reward to bet the other way.
Well, Dylan, I obviously hate that because I'm still long gold, much to my surprise, because when I saw the headlines on Friday night, I said, oh gosh, it's just going to be like April 22nd again. We're going to wake up with a 2 or 3% down day and there goes a bunch of gains. But sure enough, we hang on, and I'm hanging on as well. So I don't want that to be Ilya's reality. I don't want Ilya's reality to be my reality with my gold positions, at least for the next week. What's your trade, though? Is it long tech? Is it long semis? Is it short corn? What's the trade for Dylan Ratigan in a Trump or Harris scenario?
Well, but I think the question is, if Trump wins or Harris wins, which let's assume one of those two people will be the next president. Mm-hmm. We agreed on that?
It's probably going to be one of those two, yeah, most likely. Although if there is a tie, you're probably looking at a President J.D. Vance.
So let's assume someone who is not Joe Biden. Let me rephrase it. Let's assume someone who is not Joe Biden shall be the next president of the United States that are America.
Mhm.
I mean, that seems
That
likely, yes.
by definition means
100%.
increased uncertainty, increased volatility, increased uncertainty across the board. No matter what happens, there will be more uncertainty a week from Wednesday than there is today.
Well, I mean, we know that it's going to be somebody that's not Joe Biden, though, right? Like that much you would expect.
We
to be
know
baked
that, but
into
again,
the cake.
the visceral reality of a president-elect Trump or a president-elect Harris is much different than the visceral reality of a potential president-elect Trump or
Fair enough, yeah.
potential president-elect Harris, right? So this week we talk, and maybe it's Harris, maybe it's Trump. Who knows? I don't know. Oh my God, tune in on Tuesday. We'll all find out together. It's a cliffhanger. But there will be speeches and there will be realities on Wednesday, Thursday, Friday of next week with a new president-elect. And regardless of whether
Arizona just came out and Maricopa County said it's going to take them 2 weeks to get their ballots counted. If Arizona's not official,
but that only helps my case. That helps my case.
More volatility.
Whatever happens, uncertainty and volatility should expand between November 5th and November 15th. I know the tasty methodology, to answer your question, Chris, is to typically be short expanded volatility. I would argue that long volatility between November 5th and 15th is the best presidential election trade that is available, even if you know who the winner is. I would push the question back to you and Ilya, which is if I wanted to be long volatility between the 5th and 15th, am I best to do that in some version of a long VIX position or some other manifestation thereof of an equity index, a bond index, et cetera?
Actually,
yeah,
long yen might be a very interesting way to express that view, because it's kind of stretched here after the election there, and that election is going to fade from view as the US one comes into focus. And if whatever happens, if things get risk-offy after all of this, no matter which way,
that's
one
what I'm
that's
getting
offside,
at. Like, I don't see a world
yen.
where it's president-elect Harris or president-elect Trump and everybody gets more calm. Like President-elect Harris, people are going to be all squirreled out.
I think they're going to be calmer. Just because it's closer to the status quo.
But the point is,
markets
either way,
don't like uncertainty.
Either way, it's less calm than they are now. Is
Dylan,
my argument.
Likely,
about
yes.
this. Let's poke a hole in this. If VIX is a reflection of spot volatility 30 days out, and the election is going to take more than just November 5th to settle because Pennsylvania is telling us it may take until at least the weekend. Arizona is telling us that it may take 2 weeks, 12 to 14 days is what they're on record as suggesting. We may not know the results, let's say, November 18th, 19th, 20th.
I'm giving you the 15th. If you don't know by the 15th, it's going to get real squirrely. I'll give you 10 days to figure it out. Sosnov's going to call it at 8 p.m. on Tuesday. So if you want, he's just calling it.
Well, he's a Democrat, so I say we.
He's going to call it for Harris at 8 o'clock, no matter what.
Yeah, so like we're gonna call it on the show. Tom being a Democrat, like he's already got the results. It's like they delivered in a little envelope, like it's the Oscars. It's really cute actually, but we only get
billionaire's delusion.
Yeah, and it's nice because you get these election results early if you donate enough money to control the weather in the swing states, and I know that's like a really So Tom's just on top of it. He's really excited to share his weather
Tom
control.
will tell you right now, 8 p.m.
Democrat
Tuesday,
results.
Yeah, sure.
Yeah.
Anyway, you were saying something else.
Was I? I don't know at this point.
We're having an interesting discussion about expanded volatility regardless of the outcome.
Yeah, I think that's the way you have to look at it. Like vol probably doesn't pop initially because what we're suggesting here, right? People know that this is going to be the case. If it's a tight race and it's within 0.5%, you're going to see automatic recounts triggered. Those take a few days. I've participated in those myself as both an independent and on a party side watching, and then, sharing, do you think this vote is for this person or this person, right? It's done in a very above board way. There's so many eyes in the room. There's cameras everywhere. There's people from both parties and non-affiliated with the major two parties watching everything. There's auditing, you can contest. Oh, this person thinks this is a vote for candidate A. I think it's a vote for candidate B. Okay, contested. We'll go adjudicate it in front of an independent panel. So these things take time, right? But I think you're right there. If it's now going into the weekend, right? We're going into the weekend of, November 15th, and we start to think about having Thanksgiving dinner, and we're not going to know who the president is with a high degree of certitude. That's when vol probably starts to expand. I don't think it disappears until we know. And quite frankly, I don't think the market cares who the president is if, from a volatility perspective, if we find out quickly. If it's a clean-cut decision, Trump won the popular vote, he won the electoral, this guy's clearly president next. Fine, vol drops. Same thing for Harris. Wow, Harris really outperformed in these places, and Polymarket was wrong again, just like they were wrong in 2016. Well, then, Polymarket wasn't the 2016 market, but the point is that 2016 betting markets were wrong about Trump then too. So maybe vol collapses.
The midterms in 2022 as well.
Yeah. This is the one thing that I came across over the weekend, which was the more fascinating things I read as we were looking at the state of markets on Friday night, because I was yearning for those markets to be open. But someone who's prominent in betting markets Twitter world tweeted out, and at least I think they're prominent enough, a wallet moved $3 million to Polymarket today and put it all immediately on yes for Trump. His only issue, he cleared the entire order book, and $274,300 worth of his shares were purchased at Trump winning at 99.7 cents. $3 million to clear the entire Polymarket order book when Nate Silver's polls and everyone else's polls are saying it's a 50-50 race. I don't know. If we're in for a very long election, polls suggest that we could be. Many of these assets that have reacted to Trump in such an aggressive manner may actually come back in initially, even if he is ultimately the winner when all the dust settles, right? But if the polls are accurate and the betting markets are not close to reality, then as the results trickle in, Trump wins Florida, but we see that Harris, she makes significant enough headway in Texas that it looks like Arizona perhaps is going to swing to her. We start to implicate these things. Dylan, I think you're right. Volatility expansion.
I'm just saying, I would rather not trade this. Oh,
come on, we have to trade it.
I like set away the presidential election. I like short gold. I like long bond. I like long stocks on the super glide. Don't care about the president. You're going to make me focus on the president rather than be long or short oil or long or short some Trump basket or whatever. I would rather be long volatility than long or short a Harris or Trump outcome for November. I think the more likely outcome in November is increased uncertainty, not decreased uncertainty.
By the way, Chris,
even if you know the winner the next day, even if you have a clear winner and concession speech on November 6th, I still think volatility goes up in November.
Rumble was up 14.1% today. Geo, the private prisons that may be used as part of a mass deportation effort, were up 6.9%. You think about auto suppliers that have operations here at home that wouldn't be subjected to tariffs to such a degree, like Apogee Enterprises, they are doing fairly well today too. Look, there's a story here. The market is skating to where the puck may ultimately end up. So if you've been trading these things,
the market says Trump wins, full stop, based on prisons and cars and whatever.
The market has said Trump has not Trump's winning. Trump
has won. Yeah,
that's what the market is telling us. That's just the hard reality. So for those out there that don't like to hear that, there's still 8 days to go to the election. Phone bank. For those that liked hearing that, I question if the answer is profit taking here, or at least getting something in place that if everyone is already on one side of this trade, right? If the market's already priced in a Trump victory, let's just say it is a Trump victory. Let's say that it is a Republican trifecta, which by and large, when you look to betting markets, I think that's where we are. And from my own point of view, based on what I'm seeing in the polls, I think that's a distinct possibility. So how much further can that go to be priced in? Treasuries get a little bit weaker, gold gets a little bit stronger, drill baby drill actually hurts oil because we're basically at capacity. So that means we're going to have to invest more in oil extraction. So structural supply goes up longer term. That brings down the ceiling on oil. If that even happens in the first place, I have a lot of doubt about drill baby drill as a economic platform right now for any candidate, given how much darn oil we are producing, which is the most in the world, and records for the U.S. economy and global history of all time.
And if you go too low, you start losing American jobs in that very important sector.
Yes. We should be thinking about opportunity in the market. The job of a tasty trader at the end of the day is to be ticker agnostic. We don't really care what's in the top left of the screen. We want to know what moves the market, what can hurt us when we get into a trade, what can help us, how we need to adjust our position. At the end of everything, at the end of the day, as traders, the job is to make money, right? You have to kind of, have a schism between your own belief system and what you're seeing in the market. And I pointed out here 8 days ago before the election because I remember two very distinct events here in recent history. As we've discussed here before, guys, if you were a Democrat, listen to Paul Krugman in 2016, you got your clock cleaned for the next several months, waiting a stock market crash that never happened and still has not happened. Maybe you could call it 2020, but as soon as the federal government and the Federal Reserve stepped in, stocks rebounded right away. So didn't last long if you didn't sell out. The other one is what happened here at the start of April or start of August. All these people saying it was the Kamala crash. Kamala crash. If you got out of S&P because you saw tweets from a presidential candidate calling it the Kamala crash on August 5th, you've left the S&P 500 or you've been left in the dust by the S&P 500 to the tune of 10%. Yeah. So don't put, as a trader, don't make political commentators, your idols. Get them off those pedestals. They're not worth listening to in either direction. It's one of the reasons why I think I had a much better 2017 than some of my friends who are politically inclined on the left side because they were really anxious about what's happening with the country and with Trump. And I said, well, guys, the fact is, I'm looking at this from the market perspective. The market's telling us that these aren't real risks right now in terms of XYZ fears playing out. And the market was ultimately correct. A lot of the things that people feared didn't come to fruition. So trust the market here. Trust the price action. The price action telling you is that the 47th president of the United States is Donald J. Trump. Do you bet on 65 cents becoming $1, or do you think that 35 cents, Kamala Harris, and the trades associated with her, like a First Solar, are mispriced? That's the question for the next few days. Guys, we have 3 minutes left here. I've certainly said enough here on this Monday. I'm going to leave it to you guys to take it out. And Ilya, you have macro money next. So with all due respect to our paisan and capo of the house, Dylan Radigan, you can either take it out with your favorite pasta recipe or just general thoughts on trading and positioning for the rest of this week and what's going to be a very, who knows what October surprise is coming. Let's be real. We have to be vigilant to what may. But
I feel like this is an easy one, Chris, especially if you look at Polymarket at 60-30 Harris Trump and you look at it's so clearly not that. I don't know what it is, but it's much closer to 50-50 in terms of the potential outcome than the 65-34 reflected in the betting markets. And so whether it's short DJT or short any of the Trump basket, forget, even if you're going to, I'm just saying the trading behavior before the election, just between now and next Tuesday, the degree to which the betting markets are in favor of Donald Trump